care, the expansion of healthcare, the climate change, those things shouldn't necessarily rest on whether or not we're experiencing inflation or unemployment or how this pandemic's going. These are simply things that the American people should have and deserve, and we want to make sure that we're getting them for the American people, regardless of what these monthly economic indicators are saying.
Hey, Emily, thank you. It's good to hear from you. Emily Wilkins there, Bloomberg government reporter down in D.C. Tom, we've been doing this for a long time. How do you accurately capture the cost of living in this country, and never mind this country, other countries too, the cost of living, the cost of housing, the cost of rent?
Yeah, well, we saw the median household statistics by census released yesterday, and it went down with a pandemic year and with a lot of unemployment. But capturing the numbers, and this, John, goes back to 1947, when really modern economics invented the aggregate, the macro, the computer, bring in all the data, and it's still a science. So one thing I will say, and I hear this from Michael McKee and every pro, John Sylvia, Diane Swankin, others, is these agencies are trying the best they can at that impossible task.
Looking forward to hearing from William Lee of the Milken Institute, the chief economist. He'll be joining us shortly. Have you got a takeaway on this Microsoft buyback then, Tom?
I do,
up in the pre-market by 1.4%.
I take real issue with the gloom people. Unfortunately, they're profiting. They've only making 50% margin at the EBITDA line. How about this, folks? Over the last number of years, $16 billion up in cash from operations, money coming in, $5 billion up in the money they're spending, CapEx, which leaves them with a free cash flow build over the last 3-4 years of $15 billion per year. Just this year, they're going to bring in $60 billion of free cash flow. They're up to their eyeballs in success.
A $2.25 trillion market cap over at Microsoft. Just absolutely remarkable, and maybe bailing out the technical support of the 50-day moving average on the S&P, because we have a lift in this equity market.
That was their plan.
Futures up 10 or 11 points on the S&P. We advanced 0.2%. Alongside Tom Keene and Lisa Brammitz, I'm Jonathan Ferro. This Wednesday morning, good morning. This week just keeps going really slowly.
I think AOC should have worn a buyback dress.
Retail
that would have worked.
Tomorrow morning, alongside jobless claims. Do you want to go there again?
No, I don't want to go there again.
Skip
Lisa
it
says
too.
I can.
From New York, this is Bloomberg.
If you look at China, if you look at U.S. taxes, how much time do you spend figuring out these big overarching themes as opposed to what happens with inflation?
There's an awful lot going on at the moment, as you say, and
clearly some of the big debates at the moment are the slowing global growth picture, which we're seeing everywhere. And we're also seeing that at a time when inflation is rising and is proving pretty sticky. And to your earlier points, Francine, essentially the interplay between those two is critical. So some of those news events this week, whether it's OPEC and what's happening from a supply perspective, is going to be crucial, or indeed, of course, that US CPI print. So we've spent a lot of time thinking about inflation more recently, because clearly that leads into when we feel you may start to see the taper and when you might start to see rates going back up, particularly in the US. I mean, what might be useful just to explain a little bit is the focus that we've seen from everybody on China. You know, clearly China, huge in terms of the global commodity cycle.
It's such an interesting new world.
The world is changing.
For us, it's not about being first, it's about being the best.
While everyone is zigging, we're zagging.
We feel like we can maybe help people out more.
We have an enormous number of big ideas.
We are becoming the essential ingredient for all of this cloud economy that is upon us by connecting everything on the edge.
Right now, about half of U.S. households invest. We'd like to get that number up to 95+%. Investing should be as ubiquitous as shopping online. It should just be something that people do.
Down for 6 days out of 7, coming into Wednesday morning. Good morning. Equity futures with a bounce, although we have seen this movie before. Talked about that a few times already this morning. You start out the day at the highs and then you fade towards the lows as the day progresses and the session grows older. Right now, futures up 11 on the S&P, advancing 1/4%. The Nasdaq up by around about a third. The Russell, the small caps doing okay, up 5 or 6 points, advancing 0.25%. That's the equity market position. Here's the bond story. The takeaway over the last 24 hours or so, just the idea that weaker data out of China may be folding into a downside surprise on inflation, just removing some of the heat, taking out some of the heat from the Federal Reserve on the 22nd, and maybe they won't have to make that taper decision. We can talk about that. I think there's some real debate that needs to take place there. Yesterday, though, the story was yields lower off the back of that CPI print. This morning, again, down another basis point to 127.52, down 2 basis points on 30s. Tom, I know you were looking at the long end of the curve, 183.91 now on 30s. We were in at around 2% for a while, and we just keep getting dragged down here. That's a flatter curve right now in the bond market. Talked a little bit about the data out of China. Let's talk about this name, Evergrande, out of China. Switch on the board and finish on the chart. This is Evergrande, the indebted property developer facing, let's face it, a bit of trouble. Probably underplaying it a little bit.
Maybe.
We're down a little bit more than 5% in Hong Kong trading, 281, almost right on the 52-week low, which I think is just south of 280. The 52-week high for that name is north of 20, Tom. That's how quickly things have changed. And now we're talking about China telling banks that they won't make that loan repayment, Tom, on September 20th, the interest that's due. And this is where the dominoes start to fall a little bit more, and we start to talk about restructuring. And, Tom, who's holding the bag? I don't know yet.
Well, we don't know.
We've got to find out.
We don't know yet, but what we know is a heritage of Bloomberg surveillance is our trips to Hong Kong, to Shanghai, to Beijing, with a focus on the China over the last decades. It's people like Elizabeth Economy, Orville Schell, and people like William Lee of the Milken Institute, their chief economist, with his heritage not only at Citigroup, but at the International Monetary Fund. Dr. Lee, thank you so much for joining us today. Bill Lee, I know you haven't visited the ghost towns of empty property. Explain how in any nation you can have microeconomic incentives that allows for miles and miles of empty skyscrapers that leads to the collapse of Evergrande.
You know, Tom, part of China's development strategy has been to build up the property sector because the financial instruments in China are so primitive that people really don't have a way of saving. And so buying property is really one of the most important things that the Chinese families do. And right now, what we're seeing with the potential collapse of Evergrande is the question facing policymakers in Beijing is Evergrande systemic? Is it too big to fail? Is it their equivalent of AIG? And so what we're going to see is the potential for Beijing to step in, if not directly, certainly indirectly, to take on some of that debt. and reassure the people in China that their property is safe. And that's really critical to boost consumer demand, which is flagging with the latest data.
My working number as an amateur is $200-300 billion. Who knows, plus or minus 100 billion. Who's counting? How do they do that? Do they just print more renminbi?
Well, actually, Tom, this is a municipal problem, right? The property stuff is going to be in the hands of municipal government. And now the question is, if the municipal governments don't come in to support or cannot support because they're already overextended, that's where the federal government comes in, and that's where Beijing comes in. And that's sort of the sleight of hand that's going to be taking place. There's going to be a lot of smoke coming out of this affair, and it's going to be trying to reassure people that they don't need Beijing to come in. The property sectors are quite safe because Beijing has, for the last several years, been trying to cool off that property sector, been trying to develop the capital markets in China so that people will have other investment avenues other than property.
Well, Bill, this is the problem, isn't it? How do they achieve so-called common prosperity without slamming the brakes on this property market?
Oh, John, that's absolutely one of the big risks facing China right now is that the slowdown in China is being hit by a confluence of three systemic events. One, their draconian ways of handling COVID. Number two, Xi Jinping's dual circulation strategy that's focusing China on domestic supply and domestic demand, trying to innovate domestically. And number three is this crackdown on the regulatory crackdown on not just information gathering, but also trying to restore that Maoist theme of improving the welfare of the common folk and doing it at the expense of people, the people who are at the very, very top. And that kind of disincentive for investment is something that China is going to have to deal with, because behind all that investment has been a lot of municipal government debt, a lot of ghost cities, as Tom mentioned earlier, and a lot of innovations that have gone to waste.
Bill, when you look at things right now, I think there's a lot of people stateside that wake up and don't take much notice of what's going on right now. If we look over the last decade, I think we can all agree the majority of growth scares we've seen have been born in China. Is this one to be worried about at the moment, Bill? When you look at the data out overnight, they are big downside surprises.
The shocking part about this downside surprise is that I think most people in the West are forgetting is that China is so critical to our supply lines. You said earlier that yesterday's CPI data has eased some of the inflation pressure off the Fed, but the flip side of that is that China's slowdown, to the extent that it is on the demand side, will help with that. But if the supply chain remains impaired, we will essentially prolong these cost push pressures that we've seen. The shortages will be prolonged, and I think the Fed will have to contend with, at least tell the markets, that the inflation pressures we see today are supply side and shortage oriented and not subject to monetary policy. That's something that the message that hasn't come across. And so long as China keeps slowing down, and if it really spills over to their supply side, that's really going to cause problems for the Fed, because it'll prolong this extended period of high prices.
Bill, this is really important. Are you saying the main node of contagion here is the supply chain disruptions that we've already seen getting worse?
Oh, Lisa, absolutely. We're obsessed with the vaccination rates here in the U.S. We're obsessed with the spread of COVID and how it's peaking out in the U.S., but it has not done so in the rest of the world, especially in Asia. In fact, China has had to crack down so severely in order to maintain their zero COVID policy. And so the impact of that zero tolerance for COVID is that they will crack down on economic activity, and they're willing to pay that short-term cost in order to contain the spread, because their health policies have not been able to do so. So inflation really is going to be the longer-term consequence, or at least higher prices. I shouldn't say inflation, because we identify inflation with demand pull inflation, which the Fed can handle. The cost push pressures is something that we have to deal with now.
This is important, and this is what Gina Martin-Adams was pointing to of Bloomberg Intelligence yesterday, that we're seeing those increase in producer prices, these prices as a result of supply chain disruptions and commodity shortages increase much faster than companies are able to pass along to consumers, right? The CPI is not rising as quickly. How does this manifest itself in economic growth? Is this stagflation light, or is this something else?
Well, actually, it hasn't quite gotten there yet, because if you look at China, which is a prime example of this, their factory prices have gone up by about 9%. Their retail price has gone up something on the order of 1.5% to 2%. So they're managing to contain the inflation pressures within their domestic supply chain. We're seeing a lot of that happen here, and a lot of it is coming out of the margins. But I think one of the things that we have to keep in mind is the duration of these pressures. The high profit and high earnings that have been reported on S&P companies show us that there's a lot of profit to be squeezed. And as long as companies are able to make productivity enhancing investments, they have a lot more room to grow their profit margins with better productivity. Now, it's a race between the two. Can they maintain the investment in light of the new global attempt to raise corporate taxes, and the Biden administration is sort of spearheading the charge of raising corporate taxes. Now we threaten the goose that laid the golden egg. Now we threaten these productivity enhancing investments that are going to give us the offset to the higher prices that we're seeing at the factory gates.
Bill Lee, I would be remiss with your expertise here if I did not ask you of Mr. Woodward and Mr. Costa's allegation or statement that the General Mark Milley was calling Chinese counterparts, if you will, on President Trump. An extraordinary statement out of their new book, Peril. Your thoughts, please, on our general going back channel to the Chinese military.
You know, our back channels have always been something that depended upon personal relationships. President Biden talks a lot about how he spent so many hours with Xi Jinping, but look what happened when he asked to have a meeting with him in these back channel sort of ways. Xi Jinping just turned his back on him. So I think one of the things that we have to worry about is our ability to have communications with the Xi Jinping regime, which is right now focused on its domestic economy and is turning very inward. I think one of the things that we need to worry about is their attempt to turn inward is removing one of the big locomotives that's driving the global recovery.
Bill, lucky to catch up with you, sir, as always. Always good to hear from you. Bill Lee there, Milken Institute Chief Economist. Bill was just talking about a story that we reported on here at Bloomberg, Tom. Nick Wadhams and Justin Sink with the reporting here, that the president suggested the possibility of an in-person meeting with Xi Jinping during a phone call last week, but the Chinese president declined to commit to one. Didn't even acknowledge the question.
I don't know. You know, this is the back and forth, and what I would suggest is they want to control this discussion. It's got to be a big change for Mr. Trump and his efforts for theater on the Pacific Rim. And I don't think anybody should be surprised, and it will continue with discussion, with diplomacy.
We'll head down to Washington, Tom, to get more on that.
Yeah.
Look, this number out of China, retail sales, TK 2.5% against an estimate of 7%.
Yeah.
It's not just the scale of the slowdown. It's the fact that economists are finding it so difficult to follow what's happening in the global economy. Not just China, but the United States as well. We saw that with payrolls last Friday, Tom. And looking right now, 2.5% against an estimate of 7%. I think just Nomura and one other bank had 2.5%. We seem to be missing this, Tom. Still, where are we now? Deep into September in 21, and we still can't get our hands around where this economy is going and to what degree it's slowing down or speeding up.
John, I was in Shanghai when they were building across the Bund there in Pudong, and all I can tell you is the labor model of China is the only thing they worry about. They always, always, always go back to keeping people employed.
Social stability. TK, that's what it's all about. Futures right now on the S&P up 9, advancing 0.2% into the bond market. Yields come in by about a basis point to 127.52. And we need to have a little chat about energy worldwide. 71.44 on WTI at 1.39%. From New York City, this is Bloomberg.
With the Fast Food News, I'm Rishka Gupta. In California, Democratic Governor Gavin Newsom has turned back a conservative-led movement to boot him from office. 67% of those who cast ballots in a recall election voted no. Democratic leaders had characterized the recall attempt as a power grab by supporters of former President Trump. President Biden meets today with executives from a number of companies about his vaccination mandate for the private sector. Amongst the companies represented Disney, Microsoft, Walgreens Boots Alliance. The president has announced plans to impose vaccine requirements for roughly 100 million workers. And in the UK, job recruiters want the government to loosen immigration rules. They say the shortage of workers is hurting the recovery from the pandemic. The coronavirus and Britain's exit from the EU have dried up the pool of available workers at a time when businesses are desperate for more staff. And in China, the economy took a hit from tough coronavirus restrictions and new curbs on real estate. Retail sales growth slowed to 2.5% in August from a year ago. That was well under economist estimates. Meanwhile, construction investment shrank 3.2% in the first 8 months of the year. That reflects the government's tightening of property restrictions. China's Evergrande is one step closer to one of the country's biggest debt restructurings. Chinese authorities have told major lenders that the struggling developer will not make interest payments due next week on bank loans. Evergrande is said to be talking with banks about loan extensions. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
Do you think your synchronized swimming skills help you as the head of the European Central Bank?
Yes, they do, actually. If each individual is brilliant, it's great. But if they don't work together, you will not get the gold medal.
I want to ask about your experience as a young woman and as a woman working in this sector, and of course having that amount of scrutiny and public attention on you. South Korea doesn't have a very good record when it comes to gender relations, the wage gap, treatment of women. Did you have a personal experience of that deficit?
I was in a mechanical engineering department for 10 years for my undergrad and PhD. Of course, I was just two girls among the 120 classmates in the mechanical engineering department. And then at the time, our workshop building, we even didn't have a female bathroom. So when I watched the Hidden Figures, that was so sympathizing with my experience, because I should go all the way to the campus to go to the female bathroom out of the building. But I really want to see the tendency of the development rather than the current status.
From New York City.
We're in London, in Sydney, in San Francisco.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
This is Bloomberg Daybreak with Lee.
Balance of Power on Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. And this is Bloomberg Green.
To recap the headlines.
You do not want to miss this story.
Really good news on the jobless claims front.
How are you thinking about those dynamics?
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
The growth story in cannabis remains very strong, even after the sort of loosening of the pandemic. There was a worry that there might be wallet spend competition, but so far the cannabis sector seems to be holding up very strong.
I think the lesson from this pandemic is that harm reduction, something that we do with HIV, with sexually transmitted infections, that's the way we want to approach public health, with voluntary means, trying to give people tools to make better risk calculations, knowing we're never going to get cases to zero, that there's going to be a baseline number of cases, hospitalizations, and deaths, but just trying to keep our hospitals from going into crisis.
Dr. Amish Adalja there of the Johns Hopkins Center for Health Security. From New York City this morning, good morning. Alongside Tom Keene and Lisa Abramovitz, I'm Jonathan Ferro. Your equity market this Wednesday morning shaping up as follows. Futures positive 8 on the S&P. We advance almost 0.2%. Yields in a basis point to 127.35 and euro dollar advancing 0.25% to 118.31. Getting your attention, what is happening in the energy market? Crude, 71.45, up almost $1 on the session. We are up TK by 1.43% on the session.
Well, we see the oil lift. I look at the Bloomberg Commodity Index, and it's got a very nice trend here, John. I'm sorry, it's up 67% off the pandemic low, and I'm going to be blunt. The Bloomberg Commodity Index is really good math.
What about power prices, Tom? In the UK, in the United States, this is becoming a real issue.
Yeah, John, and I think it's been underreported here. Now, I know on the English Channel, you're down there at Sandbanks, and you're leading the good life down there. This is back, folks. John hasn't been there recently, but
I wish, Tom.
You've got the Castoli jet tender, and I've loved going out with you into the English Channel on that. But around in the North Sea, up by Yorkshire, there's no wind.
And
right?
There's a problem. There's a big issue with power. And
Did
now
you
this
see
key
this
converter, this key converter that brings this cable out of France, this electricity out of France into the UK, that's been shut down now as well, Tom. Some real problems with power. And I think this bleeds in more broadly to the conversation about higher prices. Food, energy, power prices. For a lot of people in the UK, Tom, they're starting to feel it.
I mean, Lisa, it's shocking, Lisa, how we take for granted Con Ed and the power's always on.
When it goes off, people get very upset. Remember the blackout? I mean, that became a serious crisis for everyone. Look, I think John makes a good point. Prices are going up and people are feeling inflation in a way they haven't for years. And the consequences are political as well as with their wallets in terms of what they spend.
Yeah, what was terrible here, John, is you put me in the bow of the Castoli jet tender, and I really
you're still feeling that.
I got so wet, and
you're still hurt from that experience.
I hurt the way you had me doing that off of. Is it Poole? Is that how you pronounce?
Poole Harbor, Sandbanks. Better times.
I remember Bhakti Hansadi with us right now. Unfortunately, we have to move from the lightness of John's jet tender to the reality of the great unraveling. It is from Auckland, New Zealand, to Singapore in the last 24 hours. And now we come out to the reality of, say, Nashville, Tennessee, or wherever you want to pick on. Bhakti, the direction is not good. We're up to 1,800 deaths. We were at 1,600 2 cups of coffee ago. What direction do you observe on this pandemic nationally and globally?
So nationally, the news is, I think, a little bit more positive. What we're seeing is a plateauing of that peak that we have been experiencing for the last week. The deaths are still going up, but previously we have seen that there is a lag in the deaths being reduced as the pandemic itself plateaus. Globally, there is hot pockets. There's countries that have managed to maintain epidemic control, have this low undulating rate of cases. Other countries are seeing surges and trying to adapt accordingly. There's still a number of countries globally where vaccine rates are south of 20%, and that is problematic.
You are in emergency medicine with your international acclaim in epidemiology. What do the people you know in emergency medicine observe now that's different from a year ago, different from 16 months ago?
So unfortunately, a lack of difference from 16 months ago. So there's a difference in patients, but right now, nationally, we have a shortage of resources. I'm going to be working the overnight tomorrow night. I was working the overnight last week. My hospitals are full. Many hospitals are on diversion, which is where the hospital says, we have no capacity, please find somewhere else to receive care. There's long wait times to the ICU. And the challenge that we're going to face is, as the COVID-19 cases continue to be a recent high, we are now about to face a flu surge as well. And so, physicians everywhere, we are concerned that we do not have the resources to adequately care for all the patients who are critically ill who need them.
Dr. Hansadi, how prepared are we for another pandemic?
Well, as prepared as we could be, right? We've been doing the same thing the last 18 months, right? So we have optimized at a health facility level, as a health system level, as much as possible, right? We have surge preparedness plans, we have stockpiles of PPE, we have the number of ventilators we have, the number of ICU beds we have. You have a critical shortage of healthcare workers and especially nurses. So we are running at maximum capacity. I don't know how you go beyond maximum capacity.
Well, I ask this because I've heard President Biden talk about getting a plan together to combat more effectively the next pandemic. And there was a study that was reported today from Duke and a number of other medical researchers talking about other COVID infections that they are tracking around the world. I mean, how much of a concern is this in the near term versus just something that's going to happen once every 100 years?
Well, I wish it was once every 100 years. I fear it'll be more frequent. Now, there are several variants of interest that have emerged. There are some variants that have higher transmissibility than COVID, but we don't know how that plays out, given that a significant proportion of the American population is A, vaccinated, or B, has had COVID. And we also don't know if these newer variants are likely to cause severe illness or milder symptoms, which is what I'm really praying for.
Doctor, got to leave it there. Dr. Bhakti Hansati there, Johns Hopkins Associate Professor of Emergency Medicine. One more bank delaying its return to office plans by another 2 weeks this time. Wells Fargo all over the place on this one, Tom, though they're not alone. So credit to them for coming out and updating it again. Early November now. The return to office plans are now early November.
Dinner conversation last night, John, and to me, it's company to company, literally every silo within a bank, within whatever company, dealing with the cultural aspects of this. I'm not sure it's, suit and tie business policy. I think it's cultural.
I think this is the third time, Lisa, they've had to do it in just a number of weeks.
Which is the reason why you've talked, and rightly so, about September not perhaps being the month that we thought it would be, right? I mean, that's essentially what we're looking at, is a prolonged work from home scenario.
What's the new September then? What is it? I mean, they're going with November, but does anyone think it's November? What is it, Tom? Is it somewhere in 22?
I'm looking at Auckland and Singapore. I studied them very carefully. Auckland is just panicked. They have 33 cases in New Zealand, but Singapore is tangible.
Well, but that's a separate threshold. I will say, though, when you say, what's the next September, the answer probably is there is no September in the way people thought, where suddenly there'd be a mass reopening. It'll be a drip, 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 and how economists account for that is going to be just as difficult as everything else.
Do we need a catalyst to give people faith that there is a understandable road back to normal? We had that in early November with the efficacy data around the vaccines, and the cyclical trade just ripped. Do we need one again to regenerate those kind of returns once more? Another leg in the cyclical trade, just purely from a market's perspective.
But what would it look like, right? I mean, the science isn't clear cut that suddenly the pandemic is over and everyone just has an all clear, right? It's just the drip, drip, drip. Fewer infections, more vaccinated. It's exhausting.
For those on radio, I've been itching here. It's my deep suntan from all the days I took off in August.
Thank you, Tom. Thanks.
You wanted to let us know. You've got dry skin.
Why?
Would you like me to suggest a moisturizer?
I need a moisturizer.
Dermalogica make a great moisturizer, Tom, if you want to go there. All right.
August.
Goes real well with
those
skinny
vacation
ties.
days I took, John. For a moment there, I felt.
Boosters work, and they will definitely help. The boosters, both the Moderna and the Pfizer booster, take antibodies back up to at least where they were, and probably twice or 4 times where they were at the peak. It's definitely teaching your immune system to recognize Delta better. The antibodies that people are making after a booster, they are better antibodies. And they're also probably then better antibodies at recognizing other variants in the future. If you get infected once, your immune system says, all right, here's how much I want to set aside of memory, right, to not get that again. You get infected twice, your immune system says, well, that didn't work, right? Should probably up that some. You get infected 3 times, your immune system is like, all right, this is a problem. It's really worth not getting sick anymore. And so the vaccines are essentially that, right? And if the immune memory was pretty good after the second one, what's probably going to happen after the third one is that it's going to be more stable. Even if the peak is the same, you're going to keep more of it for a longer period of time. It's a race, right? It's a race between the virus and your immune system.
What's happening on the ground right now, just in terms of consumer price tolerance?
We see a strong consumer right now. And you can see that even in the early starts to back to school and back to college season that we're really pleased with. And I think if we step back and look at the quarter, we see the evidence of that strong consumer.
Lots happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
I support the new framework.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
The Fed that has the pedal to the metal, and inflation is down the list of worries.
I think the Fed has already started to change their signaling.
The Fed is going to have trouble decoupling tapering from rate hikes.
We've had massive amount of inflation in this era of easy monetary policy and zero interest rates.
Well, you've seen inflation expectations pick up. They're still at levels that are overall consistent with the Fed's target.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
China, 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 from New York City for our audience worldwide. Good morning, good morning. This is Bloomberg Surveillance Live on TV and radio. Alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Ferro. Your equity market fading a bit here, up 6 on the S&P, advancing a little more than 0.1%. The economic data out of China, Tom, it was downside surprise after downside surprise.
Really confirming in, as you mentioned, Amur and a few others really getting it right, and everybody else a little too optimistic. Here we downs right over. I thought Bill Lee was lights out with Milk in here in the last hour, really framing all of China and what it means for us. And what it means for us, John, we looked at inflation yesterday. We look at retail sales tomorrow.
There's a belief, TK. Put it all together, it takes the heat off the Federal Reserve from rushing into a decision next week. What are you looking for on the 22nd now?
John, this is important. You and I and Lisa saw yesterday yields stable. Yields actually went up a little bit. And then look what yields did. You mentioned this. We were, we were having one of our power breakfasts there.
A spiked coffee at 10:30.
It was the Guinness was good. And John, you noted yield going to 128, now on its way to 126, 127, 18.
Yields in a basis point, Lisa, 127.18 right now.
Yeah, and I don't really understand what the implication here is, because before, remember, if the Fed were going to hold off on their taper plan, that meant higher long-term yields because it allowed inflation to increase. There's something else with this dynamic that I don't quite understand, John.
Isn't that the story, though? Hasn't that been the story over the last several months?
I
can tell you what the economic data point is, and even if I can guarantee it to you, you still don't know how this market will trade off the back of it.
And really, you can bleed that out through the entirety of the market, because not only did you see bond yields fall, usually that would be positive news for stocks because then you could keep the train going. However, not so much yesterday. Again, what's the message here, or is there something more technical at play?
Here's the price action this morning. Good morning to you all. On the S&P 500, it's a little bit of a bounce with the emphasis on a little bit. Yeah. Futures up 5. We advanced a little more than 1/10%. The technicians out there looking at that 50-day moving average,
They're
Tom.
having a field day.
Sitting right on top of it. Why don't you buy it?
One of the first questions an extinguished chairman of Bloomberg said to me, Peter T. Grauer said, Tom, what about moving averages? And the answer is, taken singularly, John, It's bad math. It's bad study. You've got to use a set of moving averages, and no one's doing that right now.
That's the most fired up you've been this morning.
It is. Grauer almost fired me.
Positive 1/10%.
I know,
in a
Lisa,
basis
should
point
have. It would have been a different history.
on tens, 127.35. This show would be so different in the FX market. Euro dollar,
here, let me just
118.27.
roll over here right now, John.
You
so
take a break. That's what it looks like. That's what it looks like.
How's your head?
In the commodity market, WTI, just to round things out, advancing about $1 on crude. Right now, Lisa, 71.41.
All right, we're talking about the markets and how there really isn't that much action, not an incredible amount of data today to look at. However, 8:30 a.m. September Empire Manufacturing Survey and import prices come out. I'm interested to see supply chain disruptions on both fronts. How much are import prices increasing as a result of those supply chain disruptions? What is this saying about what's going on in China and the transmission mechanism to the United States, as Bill Lee of the Milken Institute was talking about? And then what is the pass-along rate to the end consumers by manufacturers? 10:30 a.m. We've been talking all morning about those elevated crude prices, the highest since early August.
74.50.
Yeah, I mean, honestly, this has been a steady climb. And the interesting thing is it is a direct correlation with a steady decline in inventories in the United States and frankly elsewhere. Today we get at 10:30 a.m. EIA crude oil inventories and to try to get a sense of just how much those inventories are getting depleted. And then today Ursula von der Leyen will address the European Parliament talking about the European Union's approach to combating the pandemic. And then later
They just want to know if she can get the Eurostar started again with that power outage.
Thank you. That's what you will be asking, and
Yeah.
probably nobody else. And then Valdis Dombrovskis is going to join us on trade to talk about it here in about 15 minutes' time, John.
Tom's going to lead that conversation. And I'm excited about it.
I
I'm
am
looking forward
too.
to it. Later on this hour, is that right, Lisa?
Yes, in about 15 minutes.
Looking forward to that. Thank you very much. The data out of China this morning absolutely stinks relative to expectations. You put it together with a headline on Evergrande, a headline we've all been looking for, waiting for, expecting that China has told banks that Evergrande won't pay interest due on September 20th. And Tom, then you get the notes, and you get the notes in the inbox, and they say things like risk on, tilt towards EM, even with what's happening over in China right now.
You hear me use the word vector, John, and it's everybody gaming what their expected vector is. Massive mystery right now.
Let's get to Seema Sharp, Principal Global Investors Chief Strategist. Seema, that line comes from you this morning, meaning global growth is going to be okay, risk on positioning, upside exposure to equities, tilt towards EM. Seema, you help us out. You've got to put the money to work. You've got to help people put money to work. Why? Why an EM?
Yeah, so look, we acknowledge that this right now is a challenging time for emerging markets, especially given what's going on in China. The view on EM is really a 6-month out view, and that's based on the idea that vaccination rates are picking up in so many parts of emerging markets, not everywhere, but in a large part. And as a result, that's a way of getting in on that recovery trade, almost extending the recovery trade that we've already seen in the US and Europe. But I do want to have that caveat because, of course, it's absolutely dependent on what happens with China. If these things do start to blow out of control, then of course the view on EM is going to change. But I think at this stage, I think it's too early. We look for the various global opportunities out there, and I think in 6 months' time, assuming that China does stay kind of in order, then we do think EM can provide some opportunities.
Seema, I love how you put the differentiation, the calculus into English in your note. And you talk about a weaker, still positive growth. Is that something to fear, a weaker, still positive growth?
It's not. And I think one of the things that we've been seeing over the last week is, you've seen a lot of people come out and say, look, August data was bad. We think that markets got a little bit freaked out. But we put it down to two things. One was, of course, the increase in Delta in the US and in other parts of the world, and also some concerns about China. Now, there is an assumption built in to a lot of forecasts out there that Delta is plateauing and China's issues are starting to peter out. Now, if that changes, look, the game completely changes. But assuming that we are correct, then a slowdown in growth from the first half of the year, it doesn't mean that there's a contraction by any means. It just means it's a slower but more sustainable pace of growth. And we think that equities, risk assets can continue to do well.
Seema, pretty much the consensus has been there will be some sort of dip, buy it, in particular lean into the cyclicals, lean into Europe over the US. Do you agree with this consensus?
I am starting to get more concerned that Europe's time in the sun is starting to come to an end. The reason that we continue to like the US is not only do you get that exposure to cyclicals, which if you do believe the growth is still going to be strong. At least you have that. But also within the US, they have the secular technology trades. So I think you get a bit of both, which means that for us, US equities is still a core part of that allocation. And increasingly, as we move to the next 6 months, we're going to see that EM is more favorable to us than Europe.
What is the dollar dynamics of EM more favorable than Europe? Do you have to hedge that, or do you go in unhedged?
That's a great point, because I think with the dollar, there's still so much disagreement on where that's going. And we've seen that the outlook on the dollar has flipped around on its head from the beginning of the year. So I think, given the difficulty in predicting where the dollar is going, all the different things, we are looking at it from a more of a hedge basis.
A lot of people are talking about small caps in America against SEMA. A repeat, perhaps, of the leg higher we saw in early November last year off the back of that efficacy data for the vaccine. Now, for me, that was such a unique moment. It really convinced people we were on the road back to normal. Can you think of an equivalent? What needs to go right, the kind of good news you need to see to generate that kind of belief again?
Well, I'm also quite skeptical about the small cap trade at the moment. I think, even if we do, we're right, and the delta is plateauing, you're going to get a kind of a burst in activity again in September. It's not going to be a reopening burst, right? We've seen most of that behind us. It doesn't seem to come back. So this is a normalization in activity. So I struggle to see that small cap is a place to really play this. And I think you need to almost look to other places to enjoy the strong growth, but it's not a reopening strong growth trade.
Seema Shah, we appreciate your time this morning. Thank you. Thank you very much for being with us. The Principal Global Investors Chief Strategist. Lisa, how many times you heard people push that trade over the last several weeks?
Yeah, and the idea here is that people expect the cyclicals to lead, and yet what will be the catalyst? And you've been asking this all morning. I have an idea.
Go on.
What if they reopen the transatlantic corridor?
It's open for you.
Well, yes, this was my point. That basically,
my guest.
I mean, honestly, if we had more concrete travel rules that actually open things up, or people could travel more freely without, getting a swab down their throats.
We need the administration here to embrace a little bit of a reciprocity, a little bit of reciprocity.
John, do you assume,
John,
you've studied this better than anyone in the media, to be blunt about it. John, do you assume that they will reopen only with fully vaccinated people?
Tom, I don't want to make any assumptions because I've been waiting for how long now? We've all been waiting 18 months. I think if it goes in that direction, I wouldn't be surprised.
Okay.
Can I say that I wouldn't be surprised?
No,
I don't think I can assume anything with international travel. Many people thought that a President Biden in the White House, things would change. Things would change with the travel ban. Things would change with trade. What's changed? On that front, continuity. Absolute continuity on the travel ban and on trade too. And we can talk about trade in a moment with the Europeans, Tom, and we'll ask them if they've noticed the difference.
I'm scheduled to do 24 hours to Italy, John, and I got to be honest, I was, really, it was clear. What Italy was saying to me was, one paragraph, real clear, do this. I don't get that out of Washington.
Let's go. Let's move. We'll talk about trade in just a moment with Valdis Dombrovskis, the European Commission Executive Vice President and Commissioner
Canal Street.
for Trade. When have you ever gone below Canal Street?
Well, once. It was like 2000.
To get lotion for his head.
You've been below Canal Street.
To help the itch.
I got a huge response yesterday. They said go Botox.
I've never seen you below Houston. I've never seen you below 58.
I just don't. What do you think, John? Botox, or do I really need to get something done?
I think, Tom, if we just change the style up a little bit.
You think so?
Yeah,
you look
drop
great.
the bow tie. Drop the bow tie.
What, skinny tie?
Yeah. Yeah, I always say, this is my line, whenever anyone in America has a go at me about a skinny tie. The older you get, the wider it gets.
Oh, really?
Until it becomes a bow tie.
This is a bow tie
until it becomes so fat, you just sort of put it up there.
This is a bow tie from a lovely, lovely fan.
Should we go?
Let's get out of here.
Futures up 0.1%. This is Bloomberg.
With the first one news, I'm Rishka Gupta. Voters in California have overwhelmingly rejected an attempt to recall Democratic Governor Gavin Newsom. About 2/3 of voters answered no to the question of whether Newsom should be removed from office. It's a major win for Democratic leaders who characterized the recall attempt as a power grab by Trump supporters. Another major missile test in North Korea. Kim Jong-un's regime fired off 2 ballistic missiles that fell into the waters off the eastern coast. It's North Korea's second test in a week of weapons designed to hit South Korea and Japan. Last week, during a phone call, President Biden suggested the possibility of a face-to-face meeting with China's Xi Jinping, but Xi declined to commit to one. He continues to avoid leaving the country, even for major meetings during the pandemic. Xi hasn't left China in more than 600 days. The U.S. Justice Department has asked for an emergency court order to block a restrictive anti-abortion law in Texas. It's the first step of what is likely to be an extended legal battle that reaches all the way to the Supreme Court. The Texas law bars almost all abortions after the 6th week of pregnancy. Stanford is the top business school in the U.S. That's according to this year's Bloomberg's Business Week's ranking of the best MBA schools. Stanford scored highest when it came to compensation, networking, and entrepreneurship. Dartmouth's Tuck School was second, with Harvard in third. Global News 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishka Gupta. This is Bloomberg.
如果佢唔係屬於呢個風險嘅地區咧，就全部由聽日開始咧可以恢復翻回港嘅安排啦。呢個計劃咧就將喺9月15日咧就正式推出，名額咧係深圳灣口岸同埋港珠澳大橋香港口岸，每個口岸每日各1000人，咁即係話每天咧係合共有2000名非香港居民可以通過來港易咧係豁免檢疫咧係抵達香港。
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials, find people, analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now. Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
I'm humbled and grateful to the millions and millions of Californians that exercised their fundamental right to vote and express themselves so overwhelmingly by rejecting the division.
Governor Gavin Newsom there of California. From New York City this morning, good morning. Alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Ferro. This Wednesday morning, here's the price action. It's a brief, little mild bounce up 4 or 5 points. We've faded a little bit as this session has grown a little bit older. We advance 0.1%. Yields are coming in by a basis point or two. We've got a 126 handle on 10s now, 126.68. And the 30-year yield just keeps coming in off the back of that downside surprise on CPI. Yeah. Bit of news out of the UK, Tom. This coming from the BBC. A tweet from Laura Kuenssberg of the BBC, tweeting the following. From a number 10 source, that the Prime Minister will today conduct a reshuffle to put in place a stronger united team to build back better from the pandemic. This will be a cabinet reshuffle, certainly not unique in British politics for it to happen. Would be interested to see if the Chancellor got bumped out, though, Tom. That would be real news. Let's be clear about that, and I've got no information on that right now. So a reshuffle of the cabinet from the Prime Minister a little bit later at some point today, according to reporting coming out of the UK.
Very good. We reshuffle down to Washington. Anne-Marie Horton joins us, our Bloomberg Washington correspondent. Anne-Marie, I want you to explain on whatever topic, it can be the pandemic, it can be taxes, whatever, the majority that President Biden addresses. Gavin Newsom out in California found a majority, I don't know what it is, 63, 68, 70%, whatever the number is, within all the heat that's out there within the media. Does President Biden have the same majority of 63 or 67 or 70%?
I think it depends on the issue, really. When you look at vaccines and COVID, that's one of the main issues that drove Californians to the polls. Also, the fact that they really just staked this recall with Governor Newsom on the fact that if you don't vote for Newsom, you're going to have a, quote, Trump clone. That was the words of the president. And it'll be interesting to see if that's the same kind of strategy they're going to use next year in the midterm elections. I will say on the pandemic, the polls are starting to shift towards the president's favor in the sense that now it's out of, I believe, 3 out of 5 was a political poll last week. Americans agree with vaccine mandates. And today the president will be meeting with executives of Microsoft, of Walgreens, to talk about how they're going to implement those vaccine mandates. I think in that direction, potentially, yes. On infrastructure, really we have to wait to be seen. Let's see what goes in this bill. Fold the modern majority of Governor Newsom and others and all that into the task now of moderate Democrats. Because are they in the majority, or are they really not? And the majority lost as almost a third party. Well, the moderate Democrats just hold a lot of power, of course, because it really comes down to the Senate, where every senator has an immense amount of power when it comes to especially voting on this infrastructure package, because they cannot lose a single vote. So if Senator Joe Manchin says he doesn't agree with a House Ways and Means proposal on a tax, they're going to have a markup, because he has to get on board with that vote, or there will be no legislation. And Democrats are very aware of the fact that this is a moment. They can either all get on board or they will not see legislation passed. And that is where the House and Senate moderates, the Senate Democrat moderates really have the power.
Anne-Marie, we keep talking about these slogans, these broad talking points. Let's talk about the actual functioning of Washington, D.C. The Treasury Department very much in the forefront of implementing anything that gets passed when it comes to tax collections, when it comes to distributing COVID relief funds. How effective is a Treasury Department that's hobbled by so many vacancies?
It's a very good question, and there's a number of vacancies that Secretary Yellen has been trying to fill. Some Republicans are holding up some of those votes. A lot of that has to do with the fact that they're using it against the administration for things like not sanctioning those companies that are fulfilling the Nord Stream 2 pipeline and the likes. Treasury Secretary Yellen is moving ahead, but it does make their job much harder because not only do you not have the people in place, potentially you'll get the people in place when you need them, but are they going to be briefed in time? So that's really one of the struggles for the administration. There's a number of holdups in terms of not just in the Treasury Department, but other departments on getting individuals in place. I will say for Treasury Yellen, though, the next month is going to be difficult, of course, because we have the debt ceiling looming, and that was made very crystal clear yesterday with Republicans on the Hill. Senator Mitch McConnell being very staunch and unwavering that every single Republican will not vote towards debt ceiling. They will not get a single Republican vote. The Democrats, they say, need to do it alone. I was in a briefing with 3 Republican senators who are saying they're not going to vote towards that. So this is going to become a bit sticky for the Treasury Department in the next month or two.
Do you think that this political turmoil is perhaps a little overlooked by markets? Is this what people are saying in Washington, D.C., that we could perhaps get some sort of debt ceiling debacle that isn't being priced in?
It's hard to say because this is a perennial football in Washington, D.C. This is a debate that happens every few years, and I think markets are well aware that at some point someone will cave because they do know that there is the risk. You could just remember what happened in 2011 with the downgrade. There is the risk that of the U.S. credit. And at some point, I imagine markets believe that with Democrats in control of the House, the Senate, and the executive branch, that they will do something to raise the debt ceiling. But potentially markets should pay a little bit more attention to the fact that Republicans refuse to get on board with this. I mean, absolutely refuse. In this briefing I was in, they said that there will not be a single Republican vote towards this, and that is up to the Democrats, and they're putting the Democrats, quote, on warning is what I was told, that they have to do this alone. But the Democrats in the White House say they want to do it alongside Republicans. So there could be a standoff. Markets should maybe pay a little bit more attention, but I imagine that the markets agree that at some point they are not going to risk the credit and the health of the U.S. economy.
Anne-Marie, thank you. As always, our Washington correspondent down in D.C., Anne-Marie Hordern. Headline, crossing a Bloomberg on China. Hard to interpret, as they often are, but here's the headline for you. Requiring websites to stick to correct political direction. Lisa, just another headline on top of all the other headlines that we've seen on this kind of thing over the last, what is it, couple of months now?
Okay, I can't interpret this, but what I can say is this does indicate a greater attention to the social aspects of Xi Jinping's control over the public. To me, this has been one of the most fascinating features of the new Xi Jinping and some of the controls and dictates that have come from above.
I mean, we can talk about that all day, but what we've got to talk about is the data out of China overnight. There's a slowdown. It's really, really clear. We've talked about deceleration in America. Let's talk about deceleration in retail sales out of the world's second largest economy. We were looking for a 7 handle. Tom, we got a 2. When we talk about downside surprises, that is a monster downside surprise.
Monster's the right word there. I wouldn't use it often, but yes, John, monster's absolutely correct, and it certainly gets you under 6% real GDP. What I suggest, John, in my study here is when do the Western banks begin to react to the political dialogue that Lisa sums? I can't believe they can do an entrepreneurial forward thrust into the Pacific Rim and into China, given the sum of these headlines.
If we were sat down with the bank CEOs right now, Tom, and asked them about it, what do you think they'd say?
They wouldn't sit down with us. They go to other networks, etc.
We believe where they won't ask the questions.
They don't want you and me to talk to them.
We believe in the long-term fundamentals of the world's second largest economy.
Certainly don't want me to talk to them.
And
maybe
we want to be present there.
Yeah.
And every country has their problems. We're trying to work them out. We want to be a part of the future.
Well, we just did it.
There we go.
We represented their view.
I know it's far more difficult than that, but they don't want to talk about this on the record. Future's up 5 points.
Inflation. So you will have pondered this a great deal. I look at your data. Your inflation is down for 4 months in a row. You're at a 6-month low. Simple question. Is inflation, in your view, now transitory, and have you passed the worst of the spike?
We certainly feel, and we have passed the worst of it all. Our projection is that inflation will continue to go downwards throughout 2021 and also throughout the course of 2022. Our target is that in 2023, we will be moving to single-digit inflation.
Are the supply chains still much impacted in Nigeria, or do you see a relief there?
We see a turn because transport sector in the last quarter GDP report has picked up, and it's moved upwards. Still not in the positive territory, but it's moved up very, very significantly.
It's such an interesting new world.
The world is changing.
For us, it's not about being first, it's about being the best.
While everyone is zigging, we're zagging.
We feel like we can maybe help people out more.
We have an enormous number of big ideas.
We are becoming the essential ingredient for all of this cloud economy that is upon us by connecting everything on the edge.
Global markets never sleep, so stay connected with Francine Lacqua in London, Matt Miller in Berlin, and Kaylee Lyons in New York. Perspective on the day ahead. Bloomberg Surveillance, early edition. Weekday mornings on Bloomberg Television.
Equity futures fading just a little bit, live from New York City on radio, on TV. Good morning to you all. It's Wednesday morning. This week is dragging on. Retail sales tomorrow, jobless claims as well this morning. Futures up by not even 0.1% now on the S&P, on Russell unchanged, on the Nasdaq positive by 0.16%. The equity story for JP Morgan, they think strong growth lies ahead. What's this bond market sniffing out? Switch up the board and get to the bond market. 2s, 10s and 30s. This is the bull flatter for a second straight session now. Yields lower at the long end. We're down by 2 on a 10-year to 126.68. We're staring at 182 now on 30s. Yields in again 3 basis points. TK, that's a flatter curve off the back of that downside surprise on CPI in yesterday's session.
Yeah, it is. I mean, we've moved in. There's no other way to put it. As I told you, John, I'm looking 30-year level. Can you imagine a 179 and a 30-year bond? How quickly we've moved, and I guess we could go the other way on news flow.
3 basis points away right now, Tom. Let's get to the China dashboard. Switch up the board and get to the China dashboard. You can take a look at a couple of things. Dollar China, the Aussie dollar. Take a look at copper. That was a huge downside surprise on a data out of China. What's happening at the bottom, off the back of it? Copper, not doing much, up 0.7%. The Aussie, totally unchanged. And Tom, you mentioned dollar China, the renminbi. Average of the year, 647. Right now, 643 with a bias to strength. Yeah, with a bias to strength as well.
Yeah, we're in new strength here, not record strength, going back a number of years here. But nevertheless, 643 surprises a lot of people. And I think it's unique, it's singular, John. I'm not going to give it a Pacific Rim feel.
Sure, I just think that we're seeing stability in the face of really rubbish data and a problem with a major property developer in that country. And yet, what have we got? On dollar China, 643. Really, really stable with a bias to strength over the last couple of days. That's the cross-asset price action, 643 on dollar China. Let's get you some movers. We can do that with Romain Bostic. Morning, Romain.
Hey, good morning, John. A relatively quiet day here in the pre-market. Some of the individual movers. Well, let's start with Microsoft. Those shares moving higher, a $60 billion buyback and a slight bump up in the dividend. That'll do it. The shares are now back above 300, at least here in pre-market, up about 1% here on the day. Regeneron also getting the bid, up about 3% here. The company getting a contract expansion from the Department of Defense here in the U.S. It's going to be worth about $2.9 billion. This is for that COVID antibody treatment, and it seems to dovetail with a broader move based on Bloomberg reporting where the federal government is trying to regain control over the distribution of the Regeneron antibody treatments as well as competing antibody treatments, and those will now be coordinated through the federal government for distribution to the states here. Now, to the downside, keep an eye on CureVac, of course. This was actually, of course, one of the big innovators in that messenger RNA for the COVID-19 vaccines, but it never really got its vaccine out of the gate here. It has 2 vaccines that it's waiting for approval from the Europeans as well as from the U.S. The company now saying that it's going to end its contracts with its two big contract manufacturers to make this. It didn't provide any financial terms for this contract cancellation, and it didn't actually say whether this was going to affect approval of its two vaccine candidates here. But another big setback for CureVac, which of course has been the big laggard in the COVID-19 race. Now let's flip up the board here, take a look at a few other things that's moving. Citrix Systems getting a little bit of a bid here, up about 4% here in the pre-market. Remember, we learned a couple of weeks ago that Elliott Management had actually taken a 10% stake in this company. We're now learning, based on Bloomberg reporting, that the company is in talks with advisors to at least determine whether there's any interest about selling off the company, any buyers willing to come in and kick the tires there. Keep an eye on that stock and keep an eye on the casino stocks. We talked about this yesterday. Las Vegas Sands fell 10% yesterday during the normal session. Those shares down another 4% here this morning. Melco, which gets 100% of its revenue from Macau, those shares are now down 5 straight days, and looks like they're going to be down a 6th straight day here. More clarity here on some of that regulatory crackdown in Macau. A 45-day consultation period started today, September 15th.
Noam Bostic, thank you so much to close this afternoon as well. This is a joy. He's a former Prime Minister of Latvia, but far more, he is a physicist, and I mean real physicist, with electrical engineering from the University of Maryland. Valdis Dombrovskis is European Commission Executive Vice President and Commissioner for Trade. And what you need to know is, a year ago, 8 months ago, 10 months ago, he was in the timeout chair over vaccination. And he and others in Europe have had the great success story of the turnaround of Europe in vaccination. Prime Minister, thank you so much for joining us today. How did you in Brussels in Europe turn around vaccination in Europe to 70%?
Good morning. Indeed, as regards vaccination campaign, by now more than 70% of adult population in Europe are vaccinated. And what was important in this, that European Union was acting on this as a whole. So on behalf of the 27 member states, we were securing vaccines, and that's what helps to secure this availability. Because it's clear that the biggest and, so to say, richest EU countries could secure vaccines on their own, but not the smallest and economically less developed countries. So we ensure that vaccines are available across Europe and manage to have a very effective vaccination campaign.
Right. Prime Minister, how did you sell unvaccinated people? The New York Times today, sir, has a brilliant article on the failure of America to convince the unvaccinated to get vaccinated. What was the Dombrovskis method?
Well, first of all, it must be said, if you look at the vaccination rates in the EU, they are also uneven. There are a number of countries which are actually lagging behind. So there is still lots of work also in the EU to convince the population to vaccinate. And we are still in this work. Of course, vaccination campaigns are run by individual member states, but we are helping all we can by providing all necessary evidence, all necessary information, helping also to counter disinformation, fake news, which we see in this context. So it's still an ongoing work.
Commissioner, you've made tremendous progress. Many people have acknowledged that over the...
Hello, traders. I'm going to place an order to sell, actually, I wanted to place an order to sell short euro, but it looked like it moved already down and it moved substantially. Let's try. I'm placing an order to sell short euro at 118.246. Okay? Order placed to sell short at 118.246 at this price. So if you want to copy this trade, please do so, but please keep an eye on it, because if it will move lower, I will have to cancel this order because it will move lower. Okay? Stay safe, guys. I'll speak to you later.
As regards other countries, they take their own decisions, and we are still in continued dialogue also with US, because we think that the epidemiological situation would permit actually to lift travel restrictions also from the US side.
You've called it continued dialogue. Characterize how that dialogue is going for us right now. Are you making progress? Are you further along now than you were a month ago, or are we going nowhere?
It's at the end of the day decision for U.S. to take which third country residents they are admitting in the country. The point we are making is that if you look at the epidemiological data, also at the reliability of the COVID certificates which EU is providing to its citizens, this is a good basis actually to lift those restrictions.
How different is it dealing with President Biden than President Trump on issues like this, as well as issues on trade?
Well, as regards trade, it must be said that we are now on a much more positive track with Biden administration. Already several months ago, we resolved long-standing Airbus-Boeing dispute. We are now working on resolving another trade irritant from Trump era, which is steel and aluminium tariffs. And later this month, we will be launching a Trade and Technology Council, where we will be cooperating in these areas of trade, of new and emerging technologies. And we think it's important that EU and US, being strategic allies, being like-minded partners, actually work together on those issues.
So what's the main point of agreement between the European Union and the United States when it comes to China and the trade negotiations there?
As regards China, we share a number of concerns as regards China's socioeconomic model, like role of state-owned enterprises and their competitive neutrality, industrial subsidies and transparency of this, forced technology transfers, intellectual property rights. So also there, we agreed already in the EU-US summit that we will be cooperating closely and seek common approaches, both bilateral, but also, for example, in the context of the reform of the World Trade Organization.
Let's hope we can make some progress. Commissioner, always fantastic to catch up with you, sir. Thank you for your time this morning. Valdis Dombrovskis there. I'll get my words out. Valdis Dombrovskis there, the European Commissioner,
like Tom Keene.
Executive Vice President and Commissioner of Trade.
Okay, guys, the order to sell short cancelled. I have to cancel the order. Let's see what's going to happen next with euro. Okay?
On Twitter, just the feed there from Brussels or Strasbourg, wherever they are, and it's about vaccination. That is the theme. And John, what we mentioned earlier about what happened in Auckland yesterday, what happened in Singapore in the last, 18 hours. This is a story that, we're all benumbed by it. But the fact is 1,800 people died in America last 7 days on average.
Some very different approaches. Zero tolerance almost in places like China, elimination strategy in places like New Zealand, Australia, here in the United States, over in the UK, just a very different approach to a similar situation.
A lot of good work coming out. I mentioned the New York Times article with the team from Cornell Tech. I mean, it's just brilliant work. John Byrne-Murdoch is out just moments ago in the FT looking at the quality of illnesses of people over 65. What we hear from Johns Hopkins, John, there's just a lot of work going on right now that we got to pay attention to.
Futures fading as well. I need to pay attention to that. Up just 2 now on the S&P 500, advancing 0.05%. Yields on 10s, 127.02. Yields in a basis point. Euro dollar positive 118.20, positive a little more than 0.1%. And crude, that rally picking up steam again, 71.40 on WTI at 1.33%. From New York City, heard on radio, seen on TV. For our audience worldwide, this is Bloomberg.
With the first word news, I'm Rishka Gupta in California. Democratic Governor Gavin Newsom has turned back a conservative-led movement to boot him from office. 67% of those who cast ballots in a recall election voted no. Democratic leaders have characterized the recall attempt as a power grab by supporters of former President Trump. British Prime Minister Boris Johnson will announce changes to his cabinet later today. One official familiar with the matter says it's to ensure he has a strong and united team. The reshuffle also is to help focus on the UK's post-pandemic rebuilding. The energy crunch in the UK just got worse. A fire at a key electricity station in Britain has shut down a major cable that brings power from France. The outage will last until at least October the 13th. Electric supplies already are short in the UK and prices are at record highs. France is Britain's largest power supplier. China's Evergrande is one step closer to one of the country's biggest debt restructurings. Chinese authorities have told major lenders that the struggling developer will not make interest payments due next week on bank loans. Evergrande is said to be talking with banks about loan extensions. In Paris, this weekend, we'll see the completion of an art project that was 60 years in the making. The historic Arc de Triomphe will be wrapped in 25,000 square meters of polypropylene fabric. The idea came from artists Christo and Jean-Claude. They're best known for wrapping the Pont Neuf in Paris and Berlin's Reichstag. The now deceased husband and wife team met in Paris. Global News 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishka Gupta. This is Bloomberg.
Do you think your synchronized swimming skills help you as the head of the European Central Bank?
Yes, they do, actually. If each individual is brilliant, it's great. But if they don't work together, you will not get the gold medal.
Angela Merkel, after 16 years in power, actually, remains one of the most popular, if not the most popular, German politician ever. Who's the right person to fill those shoes?
Well, whoever is going to be filling those shoes is going to have a very hard time. Look, as the Merkel era ends, most of the certainties which we Germans, during 16 years of Merkel, tended to take as forever are evaporating before our eyes. The eternal assurance of the United States always protecting us, that's gone out with Donald Trump. The certainty that we will build an ever closer union, the EU, has gone out of the window with Brexit.
From New York City.
We're in London, in Sydney, in San Francisco.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
This is Bloomberg Daybreak with Lee.
Balance of Power on Bloomberg Radio.
Welcome to Daybreak Australia.
This is Bloomberg Technology.
And this is Bloomberg Green.
To recap the headlines.
You do not want to miss this story.
Really good news on the jobless claims front.
How are you thinking about those dynamics?
There is wide disagreement on whether we've seen the worst of the Delta variant in terms of the upsurge in cases. Where do you fall on that?
So I see that the curve is continuing to go up, which is worrying. What is making me really nervous today is that there is this accompanying surge in deaths as well.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
Even independent of COVID, the world is changing. The value chains are changing. We see geopolitical tensions, and therefore I do think that what we need to now focus in order to maintain the growth, in order to maintain our competition and our competitive standing versus the US, but also in particular versus China.
Christian Saving there, Deutsche Bank CEO from New York City this morning. Good morning, Tom Keene. We haven't talked much about Christian Saving this year, and maybe that's good news for Deutsche Bank, just not in the news in the same way they used to be.
He's done what he's done. He's block and tackle domestic retail. They gave him a huge mandate, and look what he's done, John.
The countdown to the election in Germany continues. Equity futures up 4
for office
on the S&P. Don't know about that yet, Tom. Up 0.1% on the S&P. Yields in a basis point. This curve's flatter. 127 on 10s. In the commodity market, 71.40 on WTI at 1.33%. And in the FX market, Euro just a touch stronger, Tom. Up 0.2% on that currency pair. We're positive. Euro stronger. 118.23.
Look at the energy here and power, in particular electricity, in a moment. Right now, the electricity of David Wilson, Bloomberg Stocks editor. Calendar item, November beckons.
Yes, indeed. And, you know, it's the end of that 6-month period, which historically has been awful for stocks in relative terms, hence the phrase sell in May and go away.
Is that where the phrase came from?
Yeah, something like that.
Did that work out this year?
Well, it's not working out so far, I mean, because U.S. stocks have been moving up, and we'll see. We've got a month and a half left. But what Barry Bannister over at Stifel did is he kind of put numbers, dollar amounts, to the pattern over time, starting with a $10,000 investment back in 1950, looking at the 6 months, you know, that begin in May relative to the 6 months that begin in November. And there's no comparison in terms of performance. If you only invested in the 6 months starting in May, you'd end up with about $78,000 based on total returns. If you instead only invested in the 6 months beginning in November, about $3 million.
It was so great, because 3 million versus 78,000. But David, to finish quickly with the crisis we've got in the United Kingdom and to an extent France, David, what's so important here is your wonderful chart for on radio. These are straight lines.
Yeah, they pretty much are, no question. But you'd have an even bigger line if you were invested all 12 months. As Bannister points out, you know, you'd have close to $25 million on a $10,000 investment if you had stayed in the S&P 500 since 1950.
So, I got in the triple leverage all cash fund, $2,413. You're telling me go long Halloween?
Well, I'm just telling you that if you're looking for returns, well, we aren't at the point yet where you can expect the biggest ones, but it's coming.
John Farrell, bring in Will Kennedy here on the crisis in England.
Can we call it a crisis, Tom? Feels like a crisis.
Yeah, sure.
The cost of power going through the roof in the UK and elsewhere too. Will Kennedy joining us now. Bloomberg News executive editor for energy and commodities. Will, what is the latest between what is happening between France and the UK? This cable that comes into the UK and this converter in between.
So this morning there was a fire at the English end of that cable, and that's going to knock out 2/3 of the capacity for at least a month. So that's 2,000 megawatts in power industry parlance, which is the equivalent of 2 big nuclear plants. So it's a material impact, and it couldn't, frankly, have come at a worse time. As you know, John, power prices and gas prices have been shooting higher in the UK and all across Europe as European traders deal with a shortage of natural gas going into the winter. And in the UK, we've seen day-ahead power jump to 10 times its average over the last few years. And it's likely to get worse. And in fact, I think capacity is going to be really stretched in the UK for the next month while they sort out this damage to this fire, repair this plant, and wait for a new cable, which was already planned to come from Norway at some point next month.
Will, I got the phone call from my mum, I think a couple of days ago. She was talking about renegotiating with a power provider, and they wanted a new price that was, quite frankly, just through the roof. And you know what it's like for a lot of people going into the winter, particularly the older generation. They worry about power prices into the winter. Can you get us to the winter, Will? What does winter look like?
Well, for consumers, there is a policy in the UK that protects people from extremely large increases. So if you just take the day-to-day price from your power utility, that's going to go up 12% in October. Now, that's a big jump, obviously, and it's going to hit people hard, but that will remain the increase until next spring when they'll look at it again, and it may go higher. For businesses, they have no such cap, and it's going to feed through very quickly into their bills, and the question is how quickly they feed down to consumers. In a worst-case scenario, the question that people are now asking is, does the UK have enough power this winter? I think it's unlikely that we get power cuts for ordinary people in their homes, but there may be times, and because of this fire, they may come sooner rather than later, where factories are asked to use a lot less power.
Yeah.
Frankly, in the short term, we just needed to get an awful lot windier.
Well,
Get
certainly,
those windmills going again.
certainly a huge hurdle for the United Kingdom. The broader story, as you said, this couldn't come at a worse time, and this comes as oil prices continue to climb. Francisco Blanche of Bank of America coming out and saying that if the winter is cold in the United States, he could see $100 a barrel oil come this November, December. How common is that idea across oil analysts you speak with?
Well, people were fairly... Oil has been a bit of a laggard, Lisa, in this huge commodities boom. As you can see from that chart, it sold off early in the summer as people worried about the impact on demand for traveling because of the Delta variant. Those concerns, I think, have fallen away as China seems to have got on top of that outbreak. But we have problems in supply. Ida has left Gulf of Mexico supply for power fairly constrained, and demand is looking very strong. And then you have this crisis in natural gas, and that bleeds into the oil market because some countries like Pakistan are refusing to pay those gas prices, and they're starting to burn oil again. So what you've got is you've got several bullish factors coalescing here, and that's why some people are bullish about oil. If it gets cold, those countries where people use oil for heating, Korea, the USA, Japan, Germany, that's going to drive demand even higher.
Well, thank you. An important conversation that we need to keep having with you. Come back soon. Will Kennedy of Bloomberg News, Executive Editor for Energy and Commodities. That's the world people are feeling right now, Tom. Higher prices, higher energy prices, higher power prices.
Well, yeah, and what I would focus on, John, and Lisa, I think we saw this in the literature just off inflation yesterday. John, the idea here of the inflation dynamics buttressed up against the new real wage, and the inflation-adjusted wage is getting uglier and uglier.
Energy up, Lisa, food prices around the world just sky high now.
Sky high, the highest that they've been in decades. And this really does feed into a question of inflation. The fact that you are not seeing wages keep pace, as Tom was talking about, John. It is getting worse and worse. And frankly, the idea that input prices are going up so much faster, I keep going back to this. I think it's important, so much faster than consumer prices. The inability for companies to continue passing along all of those price increases to consumers will be something to watch in this earnings season.
And John, what we're monitoring at home is a daily consumption of Shake Shack bacon cheese fries.
Nice, how's that going?
It's going higher.
Yeah, it's getting more expensive.
They're going higher.
Way to really feel the comments.
Hey, this is what's going on in the Keane household. He's very in touch with the everyday person.
Clearly.
840 calories per fry.
Do you get that delivered, Tom?
Oh, we get it delivered.
Oh, you don't go and pick it?
We do.
I thought so.
100% seamless.
Why would I think that you'd go for a walk and pick it up yourself?
No, I have knocks at the door, and vet bill and kennel fee go absolutely mental.
Do they walk up the 50 floors too?
Yeah, Afterthought goes out there and picks up her bacon and cheese fries.
This is Bloomberg.
there's just a lot of demand right now for products, whether those be items for our home office or for backyard entertainment. This has been a consistent issue for the past year or so throughout various lockdowns. The global supply chain is made up of ships and trains and trucks, and it's designed for predictable patterns of demand, which is the exact opposite of what we have right now. A lot of uncertainty about whether certain economies are going to be open or closed based on the outbreaks that they're having. So we're just seeing a lot of confusion, a lot of chaos, and a lot of uncertainty disrupt the whole system. The auto industry is very reliant on semiconductors, these memory chips that are in basically everything we buy that has sort of an electronic component to it. And they come from certain economies in Asia, like Taiwan, where they're having trouble meeting the demand. The supply chain issues are going to be around as long as you think the virus is going to be around. First or second quarter of 2022 is when a lot of people see the normalizing of all the shipping and transportation disruptions that we're seeing. But if they don't, we might be dealing with this for another year or two or three.
Lots happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
I support the new framework.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
The COVID experience for many businesses, I think, have revealed weaknesses in investment decisions.
Even if, we're right and the Delta is plateauing, you're going to get a kind of a burst in activity again in September. It's not going to be a reopening.
The Fed that has the pedal to the metal and inflation is down the list of worries.
Well, you've seen inflation expectations pick up. They're still at levels that are overall consistent with the Fed's target.
The Fed will have to contend with, at least tell the markets, that the inflation pressures we see today are supply side and shortage oriented.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
Good morning, everyone. Jonathan Ferro, Lisa Abramowitz, and Tom Keene on radio, on television. China Week, that's a theme today, but there are many, many other themes on this market. Red and green on the screen. But, John, real movement in the bond market, lower yields.
Yields in, bull flatter. That's been a story the last couple of days off the back of a downside surprise on CPI in America. Yields in again by a basis point. Saw 126 briefly, Tom. Now on a 10-year, 127.18.
Let's talk about the great ambiguity. We heard it from Bill Lee. We've heard it from others. The dollar mystery out there, John, the deepest thing within the system. It's the way you find bid and ask in the global economy. Which way does it go? That's
no idea.
Number one mystery
Tom,
right now.
you've got to tell me two things. You've got to tell me where the data will be and then tell me how the market will respond to that data. And right now, the unknown. We're in the middle, Tom. A muddle through at the moment and a real debate.
And I failed this morning, Lisa, because they haven't looked forward to retail sales in America. As we saw retail sales in China, big disappointment there. What do we anticipate tomorrow? Any idea?
Well, a lot of people are actually expecting weakness just simply because of the COVID resurgence with the Delta variant. But this will be important. How much of the big savings glut that people have on their balance sheets are they starting to bleed out into the market? And how much are supply chain disruptions keeping shelves bare for the things that people want?
Lisa, I took the Bentley, turned right yesterday off Central Park West onto 96, and there's the traffic test for Manhattan. 96 backed up all the way across Central Park. What are you observing in the redo of the city?
Well, certainly people are going back to school, and that is adding a lot of traffic. But really, I mean, we've heard from a number of banks, they're all prolonging when people get back to the office. And I do wonder, the longer this drags on, how do we get back to a new normal of 5 days a week in an office, or is that just dead?
John, one final observation here before we get to data. Are the bulls in retreat? I can't figure it out. Ben Laidler reconfirmed today
Not what I've seen.
his enthusiasm.
JP Morgan, Marco Kolanovic leading the way there, Tom. I just heard from Jonathan Golub over at Credit Suisse. I'm going to catch up with John a little bit later.
Oh, you are?
He's pointing out, you've got to look at what happens with growth, sure, but look what happens with profits. Growth can decelerate, profits can be okay. For corporate America, for the S&P 500, that story has been good and it continued to be so.
Ben Laidler really emphasizing wrong on the earnings call, and of course we'll see that off of September 30 as well. What I see is a VIX 19.43, center tendency in the angst of the last 5 days. John, what do you see?
Futures up 3. It's just a small advance, a small bounce of not even 0.1% now on the S&P. The Nasdaq just a little bit better, up by 0.16%. But it's in the bond market, Tom. It's caught your attention. It's caught mine. Yields lower for a second day, just a little bit today, down a basis point to 127.35 off the back of a downside surprise on CPI.
I'm going to go to Brent crude, not to 75 yet. Global oil, $74.55 a barrel. Let's dash to it because this is an important conversation. James Paulson's with the Luthold Group out in Minneapolis, and that gives him a perspective away from the 3 zip codes that dominate financial media. Jim Paulson, what do you observe in Minnesota? What do you observe in the greater Midwest as we see traffic back up on 96th Street at Central Park?
Well, I certainly see more traffic out here as well, Tom. There's no doubt about it, and school's adding to that. But even before school started, there was more traffic. People are out and about. Now, downtown is still a long ways from being fully populated again. It's very sparse. It's starting to pick up a little bit, but companies are backing off when they're requiring people to come back downtown, and so I think we're a ways from that yet. Probably the Delta variant has to peak, but I kind of agree with Lisa. It'll be interesting to see how long before we actually have 5 days a week back in the office here as well.
Hey, Jim, what do you make of this line from Jonathan Golub at Credit Suisse? We would expect continued upward revisions to both top and bottom line forecasts, even if economic data slows further. What's your response to that, Jim?
I totally agree with that. I really do. I think that's been the case ever since the pandemic started. People have been racing to try to catch up with where profits are. We took the economy after the pandemic to force companies to get the most efficient ever in order to survive a pandemic, and then we gave them a post-war boom. And when you're have corporate America in the most efficient position, give them rapid growth, profits just soar, and expectations are still catching up. I think we're going to print a 224 quarter trail number for the S&P earnings by the end of this year, and maybe something like 240 next year. Growth is slowing because of Delta and other factors, but we're still growing at a very good rate, probably 5 to 6% now, maybe 4.5% next year. Those are rates that are still far above anything we've seen in the last couple decades.
That's one view. Here's another. Tony Dwyer writing in over the Bloomberg. Hello, Tony. Thanks for this. My whole thing is that people are still judging the market on SPX when the internals peaked and have been in indigestion since May. Jim, are you seeing the same thing?
Yeah, I think there's some concerning things. I mean, the market is narrowed out. The advanced decline line is rolled over. That's somewhat concerning from a technical perspective. Broader market is mostly underperformed here for the last several months. That's certainly concerning. I see the concern about September and October. It's almost playing out to the playbook here. September starts and the market struggles. All those are concerning, but I wouldn't be shocked if we have a correction here. We're going to get one at some point, Jonathan, but I just don't know if I see the pressures right now. We don't have the normal things like bond yields haven't gone up; they've gone down. We don't have full-on, inflation fears at the moment. We have some, but not anything critical. We don't have Fed tightening. We don't have fiscal tightening. We still have rapid.
Okay, well then,
growth
what's your
going
target?
on.
Come on, Jim. I've never heard you more optimistic. Can you get me out above Can you get me out above 5,000 on SPX?
I don't know about that, Tom. I just think the other thing that's going on here is the Delta variant has put us in a position that I think we're going to set up a second reopening cycle. It won't be as big as the first one, but I think it's kind of the same thing. Bond yields have bottomed out. Growth, we're disappointed with it. It starts to pick up again. We have all these new employees that might come back into the labor force as benefits run out and school restarts. I just think we're going to have another good feel maybe through year end.
But Jim,
even though we're supposed to have a correction, I think it might get pushed out.
What if we don't see a full-on correction through a trigger like what you're talking about, sudden spike in yields or sudden spike in inflation? But what if there's just a slow bleed where the margin pressures just start to increase, like a lot of people are expecting? How realistic is that scenario?
Well, I think it's possible, Lisa. I mean, there's no doubt. But, I've sort of been watching. I mean, price, if you look at some of the price surveys relative to, like, wage surveys, prices are still being able to go up faster than wages. And so if anything, if you increase overall nominal GDP growth, which is not really slowing down, that is so highly correlated with profitability. Is nominal GDP growth. And as nominal GDP growth keeps rising, profits are likely to as well. And so far, companies have been able to maintain margins, I think in part because there's a lot of productivity underneath this as well.
That's a really interesting comment to set up the September 30th as well. Jim Paulson, thank you so much with the Luthold Group. You've heard today John Farrell mispronouncing too often on the edge of Tom Keene. He's not focused. Lasso and Farrow focused on 3 p.m. this afternoon. John, would you explain how Liverpool plays AC Milan? How does that happen?
The Champions League, Tom, the best of Europe getting together. We haven't been in the Champions League, I think, for 7 or 8 years at AC Milan. And you're right, I am distracted. My last call today is scheduled for 2 p.m. Eastern, then the whole diary is clear from then on.
Okay,
3 p.m. Liverpool, AC Milan.
Is AC Milan equivalent, or is AC Milan like Queen's Park Rangers?
A couple of decades ago, Tom, AC Milan were equivalent, if not better. Now I think Liverpool's got too much for Milan. The good news is that we have a pretty decent back four, just in terms of these statistics. Milan's back line has been pretty tight, pretty tidy over the last season, Tom, over the last 12 months. Likewise for Liverpool. So beyond that, I'm looking at Mane and Salah over at Liverpool, just a little bit too much for my dear AC Milan, and the fact that Ibra has not gone over to Liverpool to play this game, Tom, I'd be much more comfortable if he had done.
Do they get a big turnout? I mean, is this like a big deal?
Should be packed out at Anfield. Anfield's a special place. I don't support Liverpool. I'm a diehard AC Milan fan, but Anfield is a special place, and on a Champions League night, Tom, that atmosphere's pretty awesome. If I could take you to a ground over in the UK, I'd say some of the big ones in England, Tom, are a bit like libraries. I'm thinking of the Emirates. Thinking of Old Trafford.
Tots is corporate.
Perhaps not recently.
The new Tots
Spurs
statement
is very
wicked corporate. Yeah.
They're called libraries. Anfield, anything but. That's a special atmosphere.
How about Crystal Palace?
Stage.
I love that. That's where they filmed Ted Lasso. That's pretty cool.
South London, that's a good atmosphere too.
That's a good atmosphere.
Yeah, I prefer Upton Park back in the day.
Lisa, did we check the soccer box there this morning?
I'm sorry, I was looking at yields.
That was the first time we've done it this morning.
You did great.
I don't think we've touched it, have we?
I heard
No, we haven't. I was saving it up because I know you're focused on 3 p.m.
You're right. I am distracted this morning.
It's terrible.
Did that satisfy the itch?
A little bit.
I got an email. This guy's in London. Alan London says, "What the hell is the problem with Farrow today?"
This is just ratings.
Yeah.
Ratings death. Futures up 3 on the
We
S&P.
love that band.
Up by 0.06%.
They were such a good band. Ratings
Yields in a basis point.
Awesome.
This is what people come for, Tom, and then I just tie on the market.
Their cover, ratings death cover of Rick Springfield.
They come for the
football. They did an entire Australia
They stay
set.
for the market
They did the
action.
Veronicas, then Rick Springfield, then In Excess. Ratings death was brilliant.
New York City this morning. What a special program. Tom Keene, Lisa Bramis, Jonathan Ferro. I apologize for being so distracted this Wednesday morning. Good morning. This is Bloomberg.
With the first word news, I'm Rishka Gupta. Voters in California have overwhelmingly rejected an attempt to recall Democratic Governor Gavin Newsom. About 2/3 of voters answered no to the question of whether Newsom should be removed from office. It's a major win for Democratic leaders who characterized the recall attempt as a power grab by Trump supporters. Another major missile test in North Korea. Kim Jong-un's regime fired off 2 ballistic missiles that fell into the waters off the eastern coast. It's North Korea's second test in a week of weapons designed to hit South Korea and Japan. British Prime Minister Boris Johnson will announce changes to his cabinet later today. One official familiar with the matter says it's to ensure he has a strong and united team. The reshuffle also is to help focus on the UK's post-pandemic rebuilding. This could be the biggest stock buyback ever. Microsoft has launched what could turn into a $60 billion repurchase program, and it comes at a time when lawmakers are considering a tax on buybacks. Microsoft's recent resurgence has given it a market value of more than $2.2 trillion. It's now the second most valuable publicly traded company. And Stanford is the top business school in the US. That's according to this year's Bloomberg's Business Week's ranking of the best MBA schools. Stanford scored highest when it came to compensation, networking, and entrepreneurship. Dartmouth's Tuck School was second, with Harvard third. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishka Gupta. This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
If you look at China, if you look at U.S. taxes, how much time do you spend figuring out these big overarching themes as opposed to what happens with inflation?
There's an awful lot going on at the moment, as you say, and clearly some of the big debates at the moment are the slowing global growth picture, which we're seeing everywhere. And we're also seeing that at a time when inflation is rising and is proving pretty sticky. And to your earlier points, Francine, essentially the interplay between those two is critical. So some of those news events this week, whether it's OPEC and what's happening from a supply perspective, is going to be crucial, or indeed, of course, that US CPI print. So we've spent a lot of time thinking about inflation more recently, because clearly that leads into when we feel you may start to see the taper and when you might start to see rates going back up, particularly in the US. I mean, what might be useful just to explain a little bit is the focus that we've seen from everybody on China. You know, clearly China, huge in terms of the global commodity cycle.
It's such an interesting new world.
The world is changing.
For us, it's not about being first, it's about being the best.
While everyone is zigging, we're zagging.
We feel like we can maybe help people out more.
We have an enormous number of big ideas.
We are becoming the essential ingredient for all of this cloud economy that is upon us by connecting everything on the edge.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
This crackdown on the regulatory crackdown on not just information gathering, but also trying to restore that Maoist theme of improving the welfare of the common folk and doing it at the expense of people, the people who are at the very, very top. And that kind of disincentive for investment is something that China is going to have to deal with, because behind all that investment has been a lot of municipal government debt, a lot of ghost cities, as Tom mentioned earlier, and a lot of innovations that have gone to waste.
Just fantastic to catch up with Bill Lee. It always is. William Lee there, the Milken Institute chief economist from New York City this morning. Good morning to you all. Alongside Tom Keene and Lisa Abravitz, I'm Jonathan Ferro. Here's the price action, down for 6 days out of 7 on the S&P. Yesterday was number 6. Equity futures up a little more than 3 points on the S&P 500, advancing there by almost 0.1%. Downside surprise on CPI gets your attention yesterday. Yields lower off the back of it. It's called a bull flattener, driven by what happens at the long end. Down another basis point today, 127.18. Tom, just to round things out briefly, Euro stronger, 118.29, positive 0.2%. And crude, 71.50. Let's call it 71.50. A lift there, up by 1.43%. And I think it's still call of the week to hear from Francisco Blanch of Bank of America on this program.
I agree. Yes.
Talk up triple-digit crude for next summer, and talk about the risk, the potential that could come 6 months sooner if we get a cold winter in the United States.
Let's open this up for discussion. I think it's important. Folks, what's so important within 30 people guessing on whatever the topic is, there's a center tendency. And when people who are typically in a center tendency move to an outlier, John, that gets our attention.
He's bullish. Goldman is bullish. CPFC on the Bloomberg for commodity forecast. On WTI, Tom, for Q4, we're looking at 70. For next year, Q2, we're looking at 67.22.
I don't even know how he looks at
the south side's pretty bullish.
What's the terminal function?
CPFC, Tom.
Okay.
Just to get the forecast, but when you look at the south side from the likes of Goldman and Bank of America, they're pretty bullish. But when you look at the median forecast, just to look at what everyone's forecasts are all together and look at the median, Tom, they're still below where we are right now. So we haven't seen a full capitulation on that call. Just to mention the data out of China, Tom, let me rattle through that because that got my attention the moment I came in this morning. Out at 10 p.m. Eastern yesterday evening, TK, 2.5% retail sales in China. Huge downside surprise. We were looking for 7. That's the scale of the downside surprise here. The median estimate was 7 for retail sales in China. We got 2.5.
One of the constant themes here is the mystery of EM. We heard that from Seema Shah earlier as well. Right now joining us, so he's really only here to brief us off camera about NFL football because he is a king of gaming the games every Sunday. Damian Sassower joins us, Bloomberg Intelligence, Chief Emerging Markets Credit Strategist. Okay, Damian, here's how it works. Indonesia, 10-year piece, 6.5% yield. It sounds like a free lunch. Dovetail the free lunch into what we're observing in China.
You know, I'll tell you this. The carry that you're seeing in emerging markets now has gone up significantly because of, quite frankly, you have positive real yields there. But, you know, I got in trouble last time talking about Indonesian yields with you, Tom. You were talking about the dollar bond yield, not the local bond yield.
I'm an amateur.
I mean, you know, I'm not calling you an amateur. I'd never do that. But
John
look,
and Lisa take care of that.
You talk about NFL, you talk about gaming the system. We have to talk about the Macau casinos, the gaming industry, the crackdown overnight. That's big, big news. The sector lost $18.5 billion in market value overnight after China basically said, hey, look, we're going to basically put supervisory people on your boards. We're going to monitor your concessions. We're going to want to share your profits and your dividends with locals. This is all very big news. Bad for Sands, bad for Wynn Macau, bad for Galaxy and the rest. So, yeah, we're seeing that overnight. Markets are trying
John,
to
it's a gloomy Damien this morning.
I don't know. He sounds pretty constructive still, pretty diplomatic. How contained is Evergrande, Damien?
Well, Evergrande is another story, right? We saw S&P downgrade them from CCC to CCC overnight. That's in line with Moody's and Fitch. They're going to miss they're going to miss interest payments probably next week. Beijing pretty much confirmed that. Interest payments to banks, which basically will put them into default. And so, look, Evergrande is huge. You know, Chinese households, they have to invest their savings somewhere. They invested in property. And the fact of the matter is Evergrande just doesn't have, their working capital is effectively being used to finish all these unfinished projects. And that is the real issue. They cannot generate revenue and profits to pay back their creditors. And so, yeah, default is imminent.
Damien, if China does not rescue them, what is the fallout in terms of the market response?
Well, look, Beijing's been excellent at containing any of that fallout to the broader market. I mean, we saw that with HNA, we saw that with Anbang, and I imagine we're going to see the same thing here. Look, if Beijing wanted to step in, they could in a minute and protect Evergrande and protect the property sector, but it's just so sweeping, so large, and the extent of the off-balance sheet financing, the wealth management products really resonates with me because we don't have data on it. We don't know how extensive and pervasive it is. And I just think that's a really big risk to the economy.
Hey, Damien, we joke with you, but you are legendary for watching people lose a lot of money in EM. And it comes along, and everybody's got their horror story, including me. Trust me, folks, I've enjoyed losing money in EM. You've done better, Damien. Quick. Are we at that point again?
I think, you know, EM always overshoots both to the upside and the downside. Yeah. And what we're seeing in China, specifically in Chinese credit, is we're seeing value there.
Is it contagious or is it idiosyncratic?
That's a tricky question. I mean, look, I do think it has the potential to be contagious within China, specifically the Chinese property sectors. It does have the potential for contagion into Southeast Asia, you know? I mean, so look, you know, for me, I am all about, you know, following the money and taking what the market gives you. And when you see bonds trading at 50, 25 cents on the dollar.
I don't care.
There's cash. Oh, yeah, I mean, nobody cares.
I don't care. Green Bay Packers, done. One game, done.
I don't think so. I love Aaron Rodgers. I think the Pack are going to come back.
Okay, thank you.
Hey, you say no one cares, Tom. That's the problem, Damien. Right now, hardly anyone does in this market. And Damien, I want to wrap up there. You said follow the money. How do you follow the money when you don't know who holds this debt?
That's a great point. It's a black hole, right? I mean, that's really what the SEC is trying to crack down on when it comes to China. You know, the fact that we just don't know who holds the debt, who holds the equity. I mean, it is a black hole, and I think that will kind of improve. I mean, one of the things that we're seeing overnight is they're going to be launching the Southbound Connect program out of China. They're going to be allowing locals to invest in Hong Kong bonds, many of which are from U.S. issuers, foreign issuers, and the like. I think that's a step in the right direction as well.
Damien, thank you. It's always good to catch up with you, sir. Damien Sassat, Bloomberg Intelligence Chief, Emerging Markets Credit Strategist. Equity futures fade a little bit, unchanged on the S&P, TK. We go nowhere.
Yeah, well, we're going nowhere, and you see that green on the VIX 19.51. John, you know what? It's a day not to talk about equities, not even to talk. We're Apple free today, which is its own breath of fresh air. We're talking about bonds. Yields have come in once again. I mean, John, I love how you framed it down to a 112. Well, we're not there.
112.58 was the intraday low of the summer in early August, Tom. We're not there. 126.17. We're down about 2 basis points right now.
I'm just looking at the trend. I'm just looking at 10-year tips, unchanged. I'm looking at the nominal yields coming in, and even 2s10, as you mentioned, flattening out, 105.
Here's the interesting thing, though, about the bond market action. It's not getting confirmed by spreads. Basically, spreads continuing to come in. The credit risk is not necessarily widening out. This normally would be flight to safety. It doesn't have quite the same profile as it has in the past. Inflation is going up. What was the response yesterday in markets? Yields went down. Why? Can you give me a good narrative as to why? I mean, it's not a cohesive narrative.
You know the story. It's a beautiful one. Downside surprise on inflation takes the heat off the Federal Reserve.
I'll provide a story.
They push back taper.
I'll provide a story.
You didn't like that one?
I'll provide a story.
Go on,
that quantitative easing actually has overwhelmed net issuance for months. That's interesting.
Lisa, I was looking at yields.
Yields down 2 basis points from 26.
I want to let
Lisa,
you guys
fired
do your
up.
thing.
Fired up.
electricity subscriptions, it's a part of this new business area that we have called the clean energy services. So the purpose for this new business area is to contribute and to create this biggest movement in the world for renewable energy. We will add even more products. We have solar panels that we sell, and now we have soon I should say, the electricity subscription. So it really fits that ambition that we have to, within the frame of life at home, the most important place in the world, we can add more value to our customers to live more sustainably. And this is a big part of the climate positive strategy that IKEA has for 2030, that we will remove and reduce climate emissions more than we emit in our entire value chain.
Do you think your synchronized swimming skills help you as the head of the European Central Bank?
Yes, they do actually. If each individual is brilliant, it's great. But if they don't work together, you will not get the gold medal.
Away from a little bit of economic data stateside from New York City this morning. Good morning. Alongside Tom Keene and Lisa Browitz, I'm Jonathan Ferro. Your equity market shaping up as follows. We venture into negative territory. It's a mild move. We're down 2 points, negative 0.05%. We've just been fading a little bit over the last couple of hours or so. Into the bond market, yields are down by a basis point or two at 126.68. Your economic data is out. With that, here's Mike McKee.
And we've got a surprise, John. Some good news for a change. Those who thought the economy was tanking because of the COVID variant have got to take another look. The Empire Index for New York, which is a tertiary index, I'll agree, but it did set the pattern for last month. It jumped again, jumping 16 points to 34.3, 46% of respondents saying that the business conditions had improved over the month. The new orders index is up, and the shipment index is up, and the unfilled orders index is up. So all good news out of New York. We'll have to watch for Philadelphia and the rest of those regional indexes as they come along and see if we're going to continue to get some good news. Import prices are the other one we've been watching, and import prices declined. So maybe some of this no inflation story or transitory inflation story continues to hold.
But that's 2 days in a row.
Down 0.3% in August. Well, it's the same month, but it followed increases of 0.4 in July and 1.1% in June. So it is rolling over a little bit. It's the first decline since October of 2020.
Well, folded in your economics, folded into the yield space where we had a spike down under 126 in the 10-year. We've come back, but we're at 127.18. Is your sense the bond market is seeing the McKee data and really shifting to a softer economy view?
Well, is it a softer economy view or just
I'm asking you.
Flattening out view? I mean, Lisa's the bond market expert. I defer to her on this.
She's
but
looking at yields.
Everybody's looking
We've
at
been
yields.
told.
Not my
Lisa,
fault.
We've been told
I'm
this
looking
morning,
at
haven't we?
yields. We just got put in the Abramowitz timeout chair. Got tax on the chair.
It definitely could be slow down, but it also could be just cyclical, especially with import prices, because energy prices are back up again. We also had the storms that may have interrupted activity. So it's kind of hard to tell for sure.
Mike, thank you. Michael McKee there. Here is the data check for you. Off the back of that economic data, no big moves here. Yields lower by a basis point to 127 on 10s. Equity futures doing okay. Positive, a single point. We're basically unchanged on the S&P 500. Flat on the S&P, positive on the NASDAQ. Where's your Dow, TK? Where is
Dow,
it?
I don't know, red and green in the skin, a little red there. You know,
Negative
it's like no
37,
news.
42. It's brutal
Wait,
out there.
you're tracking the Dow more than he is. That is what this just revealed.
Just asking him. Just asking him where it's going.
You know,
I can
the
see it
banner
there.
is
It's on
simple.
that.
Lisa, I was
it's on that
looking at
pillar right
yields.
there.
Oh, thanks. That's going to be a perennial line.
Down 44.
Lisa,
Can't get away
I
from
was
down
looking
48
at yields.
Down
John, I was
49,
looking
51.
at the Dow. I could see. It's stunning, John.
Getting tough this morning, Lisa.
Alan Ruskin will save us. He's a Deutsche Bank and their chief international strategist. Yeah, with an incredibly sharp, terse note, which is what you get from Ruskin. And he's talking about not the G7, but the G2. And that can only be the United States and China. And Alan, you say this needs to be watched. In what way do you watch this relationship?
Well, Tom, I think this relationship is fraught for many different reasons, not least political, but the economic divergence, which really doesn't have to happen in tandem with what's going on in terms of the politics, but the divergence you're seeing in terms of economic policy, particularly monetary policy, is I think, important at this point in time, in no small part because you're seeing no sign that China will take up any slack in slowing growth in the United States or any tightening of monetary policy in the United States. If anything, you're seeing a slowing, further slowing in Chinese growth. So that's problematic from a global growth perspective. Obviously, we saw signals that PMIs were topping in the last PMI data. But yeah, I think we got to see how this all plays out now. But it's not coordinated, shall we say?
Alan, we have a framework of when London's overcome by events, when Berlin's overcome by events, when Washington's overcome by events. What's the experience you see of when Beijing is overcome by events?
Well, I'm not saying that they're overcome by events necessarily at this point. And obviously the fairly relaxed way in which they've approached monetary policy suggests they're not at that tipping point just yet. But I think you have the confluence of a lot of different factors going on here. Very tight credit and money conditions. You've got the COVID situation, and China's ability to live with the virus rather than stamp it out, I think is going to be crucial in the months ahead. And so I think eventually you will get a monetary policy response. Obviously, if you have issues of social unrest, and there was, chatter as it relates to Evergrande, recently, then that pushes the authorities to respond more actively.
Alan, people struggling to play this weakness outside of Chinese equities. How do you push this through the FX market when you see dollar China so stable through much of this year?
Yeah, we've been talking about that actually right now, 5 minutes before we're on the air here, and it doesn't feel like it's necessarily a currency play. The Chinese currency has a lot going for it, not least its external accounts, current account surplus, over 300 billion. That's a lot of capital that needs to be recycled. If anything, we're starting to see deposit flows moving from Hong Kong into the Chinese currency. So that's actually acting as a tailwind. So I think for the moment, at least, I think one has to be very cautious as far as the currency is concerned. I think on the bond market side, where you will get, eventually, say, a triple R cut, maybe the minimum lending facilities, also a reduction there. The bond market should be probably the haven of choice, really, because I think equities are, for this moment in time, also subject to regulatory changes that are quite unpredictable. So you've almost got push towards one asset class.
Alan, when you say the haven of choice, and I imagine you're talking about Chinese bonds, which did rally on the heels of the weaker than expected data overnight. Is this a haven for investors trying to get exposure to China, or is this a broader haven given how high the yields are and the likelihood of additional easing by the People's Bank of China?
No, I think this is mostly a haven for Chinese investors, people who are already in China. I don't think it's necessarily an international haven at all. If anything, I think international investors are still, scratching their heads in terms of, thinking about some of the longer term issues as it relates to changes in regulation. So I think the anticipation really is that the Chinese equity market might well be a drag on global equities going forward. And I think that those ongoing concerns are not going to change very quickly.
Alan, one thing I'm struggling with is the compass to use to determine FX channels at this point. At one point, it was monetary policy divergence. Another time, it was COVID vaccinations and how frequently people were getting vaccinated in different regions. What right now is sort of the driving force behind strength or weakness in some of these pairs?
So, Lisa, I mean, firstly, if you look at DXY or you look at Eurodollar, nothing's going very fast. So I think we need to keep everything in context. But if I was focusing on anything, it would still be on US monetary policy, not as much the sort of timing of the taper as maybe the end of the taper and the signaling that you get in terms of a rate hike. And we still see things like Eurodollar and the DXY currency tracking Fed fund futures. The correlation's still quite high. That's the DEC 2022 Fed fund futures. So looking to the first rate hike and the timing of the first rate hike as being the key signal. There's that angle, and then lurking in the shadows is the potential for a risk-off move. I think we still need to see if does the S&P break firmly below the 50-day moving average. It hasn't done that. That's always been a buying opportunity up until now. Let's see. If we start breaking through there in a convincing way, then the risk-off phenomena will start to take hold in currencies like the yen, which have recently done well. Let's see if they can really follow through.
Are you willing to get short the Aussie here, Alan?
Yeah, I think on balance, I think it's the right way around. I think the RBA is going to remain very dovish. They're going to be forced to do so. A little bit like we spoke about in terms of China and having to live with COVID.
Yeah.
Australia is obviously going through those machinations as well. That's not going to look good as far as economic data is concerned over the near term. Iron ore, if you look at a Chinese effect, iron ore is nearly halved in price, really. It's the one commodity that's really crashed of late. So that's very important for the Aussie. So I think the pressures are to the downside as far as Aussie dollar is concerned.
Just taking a little look at Aussie yen there as well. Alan, I know that's a fave. Alan Ruskin, Deutsche Bank, Chief International Strategist on this FX market. Euro-dollar right now, 118.21. A little bit later this morning, I'll catch up with Jonathan Gulliver, Credit Suisse. We'll do that in about 21 minutes' time, TK. We'll talk about this slowing global growth.
Yeah.
But maybe profits hang out. They hang up there. And this market is still one you want to buy. The View from Credit Suisse coming up shortly.
I think that's a really important conversation because he's been leading the way in a bullish charge, and I really wonder what he thinks about earnings persistency.
Just a headline I want to get to quickly from Pfizer, saying the Israel-US data showing waning vaccine efficacy. The company detailing data in a presentation for the FDA booster meeting.
Yeah.
Widely reported, Lisa, and widely talked about for the last couple of months at least.
The idea here that's fascinating is that a number of FDA medical officials actually resigned that disagreed about whether boosters had to be recommended. Pfizer presenting data saying that it should be. At what point does this become policy, given this divergence of opinions in the medical community?
It seems to be the direction of travel, though. Lisa, that's for sure. Equity futures this morning, they fade a little bit on the S&P 500. The stage set as follows going into the opening bell in around about 50 minutes' time. Equity futures are positive 3. We can call it up 0.1%. Into the bond market, Lisa's watching yields, 127.69 in about a basis point. Off the lows of the session on 30s.
They're the most interesting thing out
this
there.
morning, yields in 2 basis points to 183. That is a flatter curve. That's our new promo for this program. Who sent me that? I've got that now. From Hyperconvexity out on Twitter. Ferro and TK, sports, beer, monster trucks, grr. Lisa, I was looking at yields. Isn't that just, that's beautiful. That
Pretty
works.
much sums it up.
I was looking at yields.
Bar conversation with Lisa.
Wouldn't that be good? That would just be awesome, Tom. Beers and bonds. Beers and bonds on the Upper West Side.
And bears.
And bears. Beers, bonds and bears.
Oh,
Lisa, there's a podcast for you in that. From New York this morning, good morning. And hello, Bramo's Bears. This is Bloomberg.
This could be in California, Democratic Governor Gavin Newsom has turned back a conservative-led movement to boot him from office. 67% of those who cast ballots in a recall election voted no. Democratic leaders have characterized the recall attempt as a power grab by supporters of former President Trump. The energy crunch in the UK just got worse. A fire at a key electricity station in Britain has shut down a major cable that brings power from France. The outage will last until at least October the 13th. Electric supplies already are short in the UK and prices are at record highs. France is Britain's largest power supplier. Walmart is teaming up with Ford and self-driving startup Argo to launch a driverless delivery service. Testing will begin this year in 3 cities, Miami, Washington, and Austin, Texas. Ford is providing escape hybrids equipped with Argo's self-driving technology. And in Macau, the top gaming stocks lost a record $18.4 billion in value. That's after China tightened its grip. Government representatives will be appointed to supervise companies in the world's largest gaming hub. China also wants increased local shareholdings of casino companies. China Evergrande is one step closer to one of the country's biggest debt restructurings. Chinese authorities have told major lenders that the struggling developer will not make interest payments due next week on bank loans. Evergrande is said to be talking with banks about loan extensions. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
Ask about your experience as a young woman and as a woman working in this sector, and of course having that amount of scrutiny and public attention on you. South Korea doesn't have a very good record when it comes to gender relations, the wage gap, treatment of women. Did you have a personal experience of that deficit?
I was in a mechanical engineering department for 10 years for my undergrad and PhD. Of course, I was just 2 girls among the 120 classmates in the mechanical engineering department. And then at the time, our workshop building, we even didn't have a female bathroom. So when I watched the Hidden Figures, that was so sympathizing with my experience, because I should go all the way to the campus to go to the female bathroom out of the building. But I really want to see the tendency of the development rather than the current status.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
From New York City.
We're in London, in Sydney, in San Francisco.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
This is Bloomberg Daybreak with Lee.
Balance of Power on Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. And this is Bloomberg Green.
To recap the headlines.
You do not want to miss this story.
Really good news on the jobless claims
How
front.
are you thinking about those dynamics?
We didn't want our story to be ended by Taliban. We wanted to continue the path that we started, to continue to go for our achievements and to go for having our dreams to reality. So that's why we decided to leave Afghanistan and go for somewhere safe. We are concerned that what will happen to our home then. Many people are leaving, but there are still
girls who have dreams. There are still people who have dreams, and we want countries around the world to help Afghanistan to have peace over there, so that the girls over there can have the opportunities to continue their path as well.
Right now, about half of U.S. households invest. We'd like to get that number up to 95+%. Investing should be as ubiquitous as shopping online. It should just be something that people do.
Thoughts to the point where we will have recovered to pre-COVID-19 levels before the end of the year 2021. We had anticipated it would be early 22 at best. It's now going to be in 21.
Christine Lagarde, and a different Christine Lagarde than we know from the International Monetary Fund, a good amount of time at the European Central Bank, and an important and different interview here, not nitpicking each moment about monetary policy and the politics of Europe, and that would be with David Rubenstein. Peer-to-peer conversations. David joins us right now. What was it like, David, speaking to this different Lagarde?
I've known her for quite a while. When she was the head of the IMF, she was the first woman to be the head of the IMF, and she had quite an important impact on the IMF. And people were, I'd say, disappointed at the IMF that she chose to leave, because after 2 terms, she could have had a 3rd term. But I think Angela Merkel really thought that a more important job for her was to come back to Europe and run the European Central Bank, where she's the first woman to do that. And she's had a gigantic impact on the European Central Bank in just the 2 years that she's been there.
A lot of criticisms, a lot of compare and contrast to the previous leader, Mr. Draghi, now occupied in Italy. Did you speak to her of the interior politics of Frankfurt, her greeting, and where she is right now?
Well, I think she feels she's got a pretty good grip on the European Central Bank. She's articulated policies which the bank is pursuing. So they have a very clear policy now of getting to 2% inflation. That's their real target, not close to 2%, but 2%, which is not easy to do, but that's what she wants to do. She's also made it clear that the economic package they put together to deal with COVID has worked, and maybe better than they thought, because as you heard earlier, she now thinks that they'll recover to the GDP levels they had before COVID in Europe by the end of this year, which is really more than the United States is doing.
Perhaps one of the bigger challenges that she has, that the Federal Reserve does not, is that she's got a bit of a harder job herding cats than the Federal Reserve, which tends to remain a bit more cohesive. Did she talk at all about trying to keep a consistent message at such a tenuous moment?
Yes, for those who aren't familiar with the European Central Bank, it's not like the Federal Reserve. The Federal Reserve is in charge of monetary policy, but we have one part of the one country that does fiscal policy. So we have a fiscal policy for the United States and a monetary policy. In Europe, you have one monetary policy that the ECB does, but each of the countries have their own fiscal policy. So it is like herding cats. I said to her somewhat facetiously, well, her background as a national synchronized swimmer was that helpful in enabling her to figure out how to get people to work together, because she was a great synchronized swimmer. And she now has an interesting situation where she has 23 central bankers of each of the countries, and she has to preside over that. Interestingly, she said in many of these meetings, there are 22 men and 1 woman. And she said there's still amount of discrimination in Europe, even though she's got this very lofty position. There aren't that many women sitting in the meetings with her.
Do you think that she likes her job, David?
Yes. She is a very, very smart person who actually came from France, United States for high school for a year, and then she became the head of a major global law firm, the first woman to do that. I think she relishes it, in part because we didn't really talk about this much on the air, but she now has grandchildren and they live in Europe. And so she has a chance to be back in Europe. And so I think after living in the United States for about 10 years, she was ready to move back to Europe.
David, we have headlines at this moment, and I would be honored to have your perspective of a final agreement of the Canadian Pacific Company with Kansas City Southern. And as you know, this has involved 2 Canadian giants, Canadian Pacific and Canadian National, in a U.S. company as well, strategic, if you will, in railroads. Is this what is to come in this odd economy we're in? True, more mergers and combinations?
I do think you're going to see more mergers because people have fairly, I would say, not inflated, but high value stocks. And when you have high value stocks, you can use that as a really good currency to make acquisitions. And I would say the antitrust authorities in the United States, they try to deal with some of these problems, but very few major acquisitions are being blocked right now. And in fact, there is no antitrust official in charge of the Justice Department because no one's been confirmed yet. And so it's going to take a while before I think you've got the antitrust authorities catching up to some of all the acquisitions that are being done. Maybe they're good acquisitions, but I don't know whether we have the authorities yet really as focused on some of these.
Is private capital, private equity, how has that changed transactions and combinations? It seems like a new player has added ever more money, more capital to the fire.
Well, it's not only private equity firms, but you now have sovereign wealth funds, which are doing deals directly. And you also have a new phenomenon, family offices. Family offices are doing deals directly as well. So it seems as if there's not a lack of capital. Plenty of deal doing is going on. And until the Fed raises interest rates and until the economy slows down, I don't think you're going to see any change in what we now see in terms of lots of deals being done, lots of investments at relatively high valuations.
All right, before we let you go, David, you did ask Christine Lagarde about working from home and when they actually start to gather as a group. And I'm wondering, from your perspective, what's the new September? We've been talking about when people will get back to the offices. For Carlyle Group, for the companies that you speak with, when is the new time to return?
Well, at Carlyle, we have reopened our offices after Labor Day, but we're not saying that everybody has to come in because everybody has to deal with their own situation. We do think in the United States that people will be coming back to work, but I don't think you're going to see anywhere in the United States people coming back to work 5 days a week at quite the pace they did before. Some firms will do 4 days a week, maybe 3 days a week in terms of asking their people to come in. Carlyle's policy is to have people come in a number of days a week, but we're not telling them exactly what days they have to come in. But each company has to feel it its own way. I don't think we're going back to the way we used to work, which is 5 days a week, 9 to 5, and I just don't think that's going to happen in the offices.
Well, David, again, congratulations on your new book, That Piece with Ken Burns, of course, out with Muhammad Ali right now. Mr. Rubenstein, the Carlyle Group co-founder, co-chairman, peer-to-peer conversations with Christine Lagarde tonight. Lisa, I love how David Rubenstein was channeling Lisa Abramowitz, and he says, I'm looking at yields.
Oh, yeah. I didn't hear. I missed that part of the interview, Tom. Yeah. I think you were listening to a different part.
You know, Lisa, I know, is looking at yields. And the answer is Rubenstein went to the inflation-adjusted yield. Nominal yield, inflation up. Ever greater, lower, worser real yield. This isn't in the textbooks.
No, this isn't in the textbooks. And Jeff Gundlach was talking about this yesterday on his webcast, where he was basically saying, why do you want to get negative real yields? It doesn't make any sense. And he was talking about all the offsets to it. And yet here we are, even as we see inflation still with a sub-negative 1% real yield on the 10-year, you just wonder, can this dynamic change when you have the bond purchases by the Federal Reserve outstripping the entirety of what the U.S. government is selling? I mean, just think about that for a second.
Do the algebra. Your kids can do it. My kids can do it. You and I can't. Negative German yield minus growing inflation is a ginormous yield. Christine Lagarde has real German 10-year out well over 4 standard deviations. That isn't normal. What is normal? Stay with us through the day. Bloomberg Radio, Bloomberg Television, Posen, the Peterson Institute at 12 noon. This is Bloomberg.
A lot's happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
I support the new framework.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
The growth story in cannabis remains very strong, even after the sort of loosening of the pandemic. There was a worry that there might be wallet spend competition, but so far the cannabis sector seems to be holding up very strong.
What's happening on the ground right now, just in terms of consumer price tolerance?
We see a strong consumer right now, and you can see that even in the early starts to back to school and back to college season that we're really pleased with. And I think if we step back and look at the quarter, you know, we see the evidence of that strong consumer.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
From New York City, for our audience worldwide, good morning, good morning. 30 minutes away from the opening bell, equity futures set up as follows on the S&P 500. Fading as this session grows older, positive now, just 6 points, up a little more than 1/10%. The countdown to the open starts right now.
Everything you need to get set for the start of U.S. trading. This is Bloomberg, the Open, with Jonathan Farrow.
From New York, we begin with the big issue, decelerating global growth.
Markets are all about expectations.
We've seen a big pickup in uncertainty.
It's peak everything moment at the moment.
Sentiment is falling.
We're in a decelerating growth environment globally.
Supply chains remain disrupted.
Peak growth, peak earnings, peak monetary policy.
Pile on top of that valuation concerns.
We'll start to see a wave of earnings downgrade.
Margin discussions are starting to heat up again.
The reopening trade is going to face some headwinds.
A number of strategists come out over the past week articulating pullback concerns.
All this looks to us like bounces in a downtrend.
We overshot to the upside.
The short-term impact is clearly through sentiment.
Market expectations have been reset dramatically.
Joining us now, I'm pleased to say, is Nuveen's Tony Rodriguez, Invesco's Noel Coram, and Jonathan Golliver, Credit Suisse. Noel, I want to come straight to you and start with the economic data that's coming out worldwide. The degree to which we are experiencing a deceleration outside of expectations. Your read on things?
So yeah, we are seeing a little bit of a deceleration within the data. You saw in the jobs numbers, kind of that reopening trade or reopening story being impacted a little bit. And then same with CPI yesterday, where airfare, it was very clear that airfares and passengers attending flights are also being impacted. And so we're seeing it subtly in the US, not so subtly in other places around the world. But it's going to be something that the Fed is going to be watching very closely. And I think that's what they need this time for, is to make sure that with the cold and flu season coming up, with schools reopening and the stimulus expiring, how are the consumers going to react? The thing that kind of gives us hope over the longer term is that consumer balance sheets are very healthy, debt burdens are low, and savings rates are high.
Are we underestimating how quickly things are slowing down? Tony, the reason I asked that, you looked at the China data this morning, 2.5% on retail sales against an estimate of 7, a 2 handle. We were looking for 7. The scale of the slowdown, whatever the data point right now, Tony, payrolls in the United States, retail sales in China, it just appears to me that economists are struggling to get a read with what's happening.
Yeah, good morning, Jonathan. Good to be with you. I think you're right. I think that we are certainly coming in well below expectations, particularly on consumer-driven aspects of the market. And, we kind of characterize it as transitioning from growing pains to slowing pains. So we do see a slowdown globally. And the retail sales number is one of the biggest ones where we're seeing that. It's no surprise given what's been happening with COVID, given some of the labor shortages that continue, partly due to reluctance to return to work because of COVID. So we're looking very carefully at the retail sales number here tomorrow in the U.S. The consumer is one of the areas where we think, given the strong balance sheet that was just mentioned of the consumer and the health of the consumer, we expect that this is going to be a Delta-driven kind of weak period for consumer spending, and we will see some recovery as we move into next year. But the key is that not only is growth slowing down, but inflation is also moderating. So the good news from that equation is that it allows the Fed to continue along its pretty well-telegraphed taper path without any tightening in sight in terms of the funds rate until certainly...
Okay, traders, I'm going to place stop on profit. We was holding, as you can see, for quite a while, British pound at the price of 138.314. It was short position. It was for several weeks. Right now, I want to sell this position if it will move higher. Okay, so here is we sold short this position, and I'm going to place order to sell if it will move to 138 to 64. It will give us 5 pips. In our case, it will give us £500 in profit. Okay, if you follow our trades for quite a while, if you already hold these positions on British pound, please do so. Please place an order to sell short your position you was holding at 138.314, and let's see what's going to happen next. Okay, guys, stay safe.
Even when futures have been higher overnight, we've seen the cash index fall from its open. Again, the drops have been relatively mild, but it's something to note. And Vanda Research this morning actually saying it may be because more retail investors aren't buying dips as ferociously as they were earlier this year. Of course, this isn't just limited to U.S. equities, John. We've seen some weakness in Europe as well. And of course, the Hang Seng Index in Hong Kong down 3.8% over the last 2 weeks. A lot of that has to do with fears around tech regulation in China, but growth fears are at play there as well. And obviously, Japan a little bit of an exception here because of optimism about a new prime minister bringing more fiscal stimulus. And when you take a look beneath the surface of the equity market, at least for the S&P 500, we do see more hedging taking place. A really easy way to do that, of course, is through the put-call ratio, basically showing how many bearish option bets are being put on relative to bullish ones. That has shot higher over the last month or so, actually now at the highest since the tail end of 2019. So maybe some uncertainty leading investors to protect themselves, John.
Kelly, thank you. Thank you very much. Tony Dwyer wrote in a little bit earlier on the Bloomberg terminal, and he said the following. I want to share it with you all. My whole thing is that people are still judging the market on SPX when the market internals peaked and have been in indigestion since May. Jonathan Goldberg, I wanted your reaction to that. That's why I've brought it up again. What is your reaction to that the market internals peaked and they've been in indigestion since May?
That's probably a fair read. I mean, if you look at the cyclical trade, which is a part of the energy, materials, industrials, brick and mortar, retail, these are all areas that do well in an improving economy. They were leading the market up until March, and they rolled over. So there's a lot of turmoil underneath the surface. We do think that ultimately that trade, that old economy cyclical trade, is going to reassert itself. But Tony Dwyer's comments, I think, are pretty accurate.
Tony Dwyer from Canaccord, writing in a little bit earlier. Now, I want your take on this. We started this year with this big reopening trade. Arguably, that peaked in March. We've talked about the internals peaking back in May. Walk me through the trajectory of your allocation to risk assets through the year so far and where you're looking right now.
So we've definitely been playing the reopening trade through most of the summer, kind of peaking out in Q2, at least within certain credit spaces. And then going forward, it's really going to be about growth, especially in this fall kind of quarter and Q4. But longer term, we do like risk. We do think corporates and consumers are going to be well supported. It's just a matter of waiting for that volatility to pick up and staying nimble for now, and then looking to add on any dips that we might see from Delta variant, that we might see from the debt ceiling or any other rates moves.
I've heard that from pretty much everybody over the last week, and that's not an insult. I'm not throwing mud at you now. I'd never do that. But Tony, I've heard it from pretty much everyone. Everyone's expecting this move lower, and everybody that says that wants to buy this move lower. Tony, can you give me your response to that?
Well, Jonathan, I think you're right. I think positioning is pretty consistent across the board, and that speaks a little bit to how we've been in such a range-bound market, really, since the beginning of the summer, or certainly when you look at the fixed income markets, whether it's credit spreads, whether it's treasury rates, et cetera. So the positioning, I think, is somewhat concentrated in terms of maybe modestly short duration, for example, kind of overweight to risk assets. I think the more important component of that is really, we think it's going to be a security selection market. We expect maybe some modest spread widening in most of the risk assets and fixed income, but that they will still outperform higher quality treasury markets. But within those risk markets, it's really going to be about security selection, because you're not getting paid a lot to take broad-based risk. You need to be very careful from a very sovereign-specific, credit-specific, structure-specific perspective to make sure you can outperform over the next couple of months in this kind of, we think, moderating growth, but still above potential growth environment, and a Fed that will begin tapering by the end of the year. So liquidity will become a little bit tougher as we move into 22.
Hopefully we can get a little bit more detail from you on those calls through the hour, Tony. One thing that is clear, and we've repeated it on this program time and time again, this September is not turning out to be the September that many people were looking for, including Wells Fargo. Mike McKee, Wells Fargo have now pushed back the return to office plans once again, this time to November 1st by a couple of weeks, and they're not alone, are they?
They're definitely not alone, John. Now, the first rule of forecasting, I'm sure you and the panel know, is that you give a result or you give a time frame, but you never give both. The chief strategy officer for Boeing telling us earlier this week that the company is confident that a return to business travel will mean more sales, but he's not putting a time frame on it because Delta, not the airline, the variant, continues to screw up return to office plans. You can see office occupancy still extraordinarily low in the biggest cities, even in Texas, where you're supposed to pretend the virus doesn't exist. The latest company to push back return to the office plans is Wells Fargo. They had wanted their employees to start coming back in mid-October. Now they're saying November 1st. They have the biggest workforce of any U.S. bank, so it makes a difference. But this is the third time they've pushed back their return date. Now, this is all bad news for the economy. Fewer workers in the office, fewer people going out for lunch and dinner, fewer people shopping. You can see the rollover there. The white line is the Chicago Fed, or is the open table numbers. The yellow line is the Chicago Fed. They track retail sales, and they're seeing, as you can see on the far right there, a big drop. And they think this is what we're going to see tomorrow in the retail sales numbers. President Biden meeting with business executives today to push his plan for requiring companies with more than 100 employees to insist those workers be vaccinated. So far, genuinely well received by companies who've been afraid requirements would lead employees to quit. But even if everyone gets vaccinated, it's going to take some time, and the economy is going to take some hits. You saw there the Atlanta Fed GDP Now number has come way down. A reminder that September is not the month we were looking for. It's not a September to remember.
I just don't know when September's meant to come now. What's the next September? Is it December? Is it 22? Mike McKee, thank you.
Oh, no.
Mike McKee, I've got no idea. One thing you'll hear on repeat on this program, it's a recovery delayed. It's not derailed. Jonathan Golub, your line, this recovery and this growth we're seeing will be elongated through 22. You're pretty bullish on that, aren't you?
Well, yeah, I think that we're almost underestimating the issue here, and that these supply chain disruptions, this issue of transitory, this is going to take much longer than we think to work through. And it's easy to call it supply chains, but you have this disconnect between huge numbers of job openings and lots of people looking for work but not being able to match them. We have semiconductor problems, we have building material problems, we have shipping problems. And the idea that this is going to snap back really quickly and that we're going to get to something that looks normal is probably off. So instead of this being a 3 or 4 quarter process of getting back to normal growth, maybe this is a 6 quarter or 8 quarter process. I don't think from an equity point of view that really matters, but the path is going to feel a little bit different if we continue to have shortages and inflation and disruptions.
Jonathan Golub sticking with us alongside Noel Coram, I'm pleased to say, together with Tony Rodriguez. Let's get you some price action. Equities up 6 on the S&P, advancing 0.14%. With your movers at a market desk ahead of the opening bout. Here's Abby.
Well, John, those fractional gains for stock futures come after a brutal day yesterday, a bearish reversal where stocks were down sharply at one point, closing down. The S&P 500 finishing down 6 out of the last 7 sessions. Today, though, yesterday's worst sector, which was energy, may be the best sector. We see some of the big names sharply higher: ExxonMobil, Occidental Petroleum, Schlumberger, oil up for a 4th day in a row. That's really interesting because it diverges with those stocks up, so a different take on the economy from those risk asset traders. Where we continue to have declines, though, John, clearly the China space. We have China tech shares both down sharply, down more than 1% on data out of China, plus, of course, fears of regulation. That's been the story for China tech since February. One index at one point down more than 50%, as you know. But yesterday and today, big, brutal declines for the casino stocks as officials in Macau are indicating that they are going to put in more regulation there for those casinos, taking those stocks lower. And then finally, just to round it out very quickly, you can see that Green Sky is soaring on the news that Goldman Sachs is buying the company for $2.24 billion in a bid for loan expansion, John.
Abby, thank you. Much more from Abby through the ad. Coming up, the latest developments from Washington, D.C. A top Democrat seeing a lack of support for President Biden's tax plan. That conversation coming up next. From New York City this morning, good morning. Futures positive, just 0.15%. From New York, this is Bloomberg. Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
Even as we have policy debates on major economic policy issues, we all should put politics aside when it comes to the debt limit and do what's right. But I think we're seeing major progress over the last couple of days in bringing forward the tax reform agenda that the president outlined earlier this year.
There's a different picture emerging on Capitol Hill. House Ways and Means Chairman Richard Neal saying the president's tax plan lacks sufficient support. This coming as disputes over the debt ceiling continue, with Republicans united in opposition.
Let's make this perfectly clear in case anybody's in doubt. The Democratic leaders have every tool and procedure they need to handle the debt limit on a partisan basis, just like they're choosing to handle everything else.
Down in D.C., our Washington correspondent, Bloomberg's Anne-Marie Hordern. Morning, Anne-Marie.
Good morning, John. As you say, a lot is going on in Washington, D.C., really a lot to digest today and over the course of the next few weeks. So let's break it down first with what Brian Deese had to say. And this is regarding really the president's ambition in terms of taxes. And Deese basically said the president's not getting everything they want, but they're happy with some of the core. And what Richard Neal was getting out, the chairman of the House Ways and Means Committee, which, by the way, they need to send that legislation and the draft legislation to the Budget Committee today, is that they just don't have the support right now for the inheritance tax. And we know that the Biden administration was really pushing to try to equalize employment income tax as well.
Okay, guys, position closed on British pound, as you can see, at 138.264. We was holding this position for several weeks, I think, and for all of you guys, it's worth it. We didn't pay anything at all overnight because for overnight charges, because broker pays us. This is short position. And we made £500. Okay, guys, stay safe. I'll speak to you later. By the way, if you want to, today is the last day for strategy. We're going to increase strategy, not much, just about 20%. So if you're looking to get the strategy, you can get it right now for discounted price. If not, just keep following our trades, copy them, and make money as we do. Stay safe, guys.
They have the power to do this, and they do it amongst themselves. The Democrats want to go bipartisan. They don't want to be the ones that have to raise it alone. They want the Republicans on board. So at some point, someone needs to cave. And that's going to be something we're going to be watching very closely, especially those in the Treasury market.
Anne-Marie, thank you. Down in Washington, D.C., let's get to the Treasury market right now. Tony Rodriguez, I want to come straight to you on fixed income, on Treasuries. Are you bracing for anything here? Preparing for anything at all?
Well, not in the very near term. I mean, we do think that we're going to be range bound here, certainly until we see retail sales, FOMC next week, and another 1 or 2 months of jobs reports to really shift out of the range that we've been in. Our view is that we are going to see higher rates. By the end of the year, modestly higher rates, 25, 50 basis points. If we look out to late 22, we could see a 10-year that gets up to 2 to 2.25%. The point there being that, yes, it's a delayed recovery. It's a delayed rise in rates, but it's not a derailed recovery. But number two also is that we're not expecting to see 3% 10-year rates, which would also be troubling, we think, for valuations in the equity market and other risk markets. So 22 is not going to look like 21. You're not going to have a 20% S&P year. You're not going to have spread tightening. But we do think it's a year where those assets will continue to outperform cash and high-quality Treasury markets.
Noel, same question to you.
So we are a little bit in the same camp in the sense that the next couple months are a little bit expected to be a little bit volatile because of Delta, because of the debt ceiling and other concerns around growth. But over the long term, yes, we do think that the Fed is, from a tapering standpoint, going to announce in November, taper in December, but that ultimately is not going to mean that they are tightening. And then as a result, the curve and the rates markets is going to be pressured higher. And yeah, that's what we're looking for over the next, I'd say, 6 months.
2 for 2 then. You're both looking for higher yields and potentially a steeper curve. Jonathan Golub, as an equity strategist, you're listening to this. For much of this year, for many parts of it, many people have tried to be bond market strategists in the equity market. When you hear this bond market conversation, how do you plug this in to the equity view in any way, shape or form, John?
Well, first of all, I think equity investors, with respect to the debt ceiling, kind of roll their eyes and just assume that it's going to magically go away and that we won't have to worry about it. And we'll probably be right again. But we've actually been believers that interest rates and credit spreads would be lower and that was going to support higher stock prices. The interest rates in the U.S. have been moving more towards where European rates are, and if that trend continues, then I would be on the other side of the trade on this 2% plus 10-year. Putting it differently, I think that we're probably going to see 10-year more or less where we are now at the end of the year, and that's going to be a surprise for many. Remember, Jonathan, for 30 years, people have been talking about interest rates are going to have to turn around and go higher, and for 30 years, they've been wrong. The second thing is on credit spreads. Everyone is saying is how tight they are, and they are, but that's because the U.S. government has implied that if things get bad, they're going to step in and they're going to, get in the way of default risk, and that means that credit spreads have a reason to be lower, and bankruptcies are lower, and volatility is lower. So historical averages are not enough, and I think this is going to be a surprise for markets and good for equities.
10-year yields right now just south of 130 at about 129. John, Noel, Tony, sticking with us. Coming up, the morning calls, and later, Citigroup warning about revenue declines for the third quarter. We'll pick up on that story in just a moment. From New York, this is Bloomberg.
I think what we've seen during this period of time is that communicating via video is not a fad, that we are using it in all aspects of our lives. For work, for learning, for communicating, for staying in touch.
Minutes away from the opening bell in New York this morning. Good morning. Equity futures up about 0.1%. That's the price action. Let's get you some morning calls. First up, Argus upgrading Alcoa to a buy, highlighting an improving balance sheet and bullish developments out of China. Wells Fargo naming MGM Resorts a top pick, touting outsized exposure to the recovery in Las Vegas. And finally, JP Morgan downgrading Chevron to neutral, citing the stock's premium valuation and expectations for higher spending. Up next on the program, Senator Warren urging the Federal Reserve to break up Wells Fargo. That conversation next. From New York, this is Bloomberg.
didn't want our story to be ended by Taliban. We wanted to continue the path that we started, to continue to go for our achievements and to go for having our dreams to reality. So that's why we decided to leave Afghanistan and go for somewhere safe. We are concerned that what will happen to our home then. Many people are leaving, but there are still girls who have dreams. There are still people who have dreams, and we want countries around the world to help Afghanistan to have peace over there, so that the girls over there can have the opportunities to continue their path as well.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Global markets never sleep, so stay connected with Francine Lacqua in London, Matt Miller in Berlin, and Kaylee Lyons in New York. Perspective on the day ahead. Bloomberg Surveillance, early edition. Weekday mornings on Bloomberg Television.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Wednesday morning, good morning. 20 seconds away from the opening bell in New York City this morning. This is the price action for you on the S&P 500. 6 days lower out of 7. Coming into Wednesday, a little bit of a lift this Wednesday morning. The peak of the day over the last few sessions coming very early in the session. We advanced by a little more than 1/10% of the S&P. That's the opening bounce. Switch on the board and get to the bond market. We look a little something like this on 10-year treasuries. Your yield 128.20. Yields were in a couple of basis points this morning. We had a look at 126, and now we are totally unchanged. In the FX market, the euro showing some strength, the dollar some weakness. Euro dollar 118.19, up a little more than 1/10% on that currency pair. And crude, the rally continues, 72.27. Call it 72.30. We advanced by 2.55%. That is the cross-asset price action. Let's get you some movies at the market desk. Here's Abby.
John, let's take a look at those very small increases for the stock meters here on the open. Yesterday's biggest laggard and yesterday's biggest leader, those are both higher today, helping out the major averages. Those are Apple and Microsoft, both higher. You can see Apple up 0.6%, snapping a brutal day yesterday. In fact, over the last 5 days, at one point day yesterday, down 7%. Today, trying to climb back a little bit. Microsoft announcing a $60 billion buyback. Folks clearly like that. The banks down ever so slightly as yields are trying to figure out what's going on, but that was one of the worst sectors yesterday. The worst sector yesterday, however, energy. We have a big snap back to the upside here with that big rally in crude that you were just highlighting. Brent crude, in fact, above $75 per barrel for the first time since early August. ConocoPhillips, BP, and Transocean all up well more than 2%. The big question here, though, John, can these gains hold on? Energy was higher at one point yesterday in the early morning along with the banks, and then the worst two sectors. Let's see. Early trading right now.
Right now, top of the pile, though, Abby. Thank you. About 90 seconds in, advancing 1.8% for energy. Bottom of the pile, utilities. The S&P 500 advancing 0.16%. Muted, mild gains, marginal gains on the S&P. Middle of the pack, the financials. The financials advancing 0.02% on my screen. The bank's in focus. Senator Warren urging the Fed to break up Wells Fargo, looking for the bank to separate its traditional banking and Wall Street businesses. This coming as the lender faces new regulatory action this month. Back with us on the financials, on the banks, here's Kaylee.
Well, John, the fact that Senator Elizabeth Warren is pushing for more banking regulation probably shouldn't come as a surprise to anybody, but this suggestion, a breakup, is a bit extreme. And of course, this follows regulatory action we saw earlier this month, a $250 million fine, and further action because regulators say citing a lack of progress addressing issues in its home lending loss mitigation practices. So that adds to more than $5 billion in fines and legal settlements it has paid over the last 5 years, and the more than $21 billion it's paid since back in 2000. So regulation obviously is one headache for the banks, John. Another is low yields, another slow loan growth, and the investment banks especially have had to deal with lower volatility than they enjoyed in 2020, which of course is a hit to trading revenue. We got some news on that from JP Morgan and Citi yesterday. They actually say they're holding up better than expected on that front. Citi saying revenue will be down in the low to mid-teens. The street expected a 15% drop. JP Morgan, for its part, says it'll be down about 10%. And obviously, the banks themselves have done pretty well so far this year from an equity performance perspective. The KBW Bank Index is up about 27% over the course of 2021. But when you look back over the last 3 years, fintech stocks have far outperformed traditional lenders. That may be why you're seeing the likes of Goldman Sachs announcing a purchase of fintech company GreenSky today for $2.25 billion, John.
Katie, thank you. Got to wait a little longer for earnings season. October 13th is when JP Morgan will kick things off. October 13th, about a month away. We caught up with Wilmington Trust Tony Roth on the banks. He's betting on them. Take a listen.
You're going to see this financials outperform the rest of the market. Clearly, the credit cycle is probably still a couple of years down the road. So without seeing that credit cycle occur, you're going to see all those financial companies that have leverage in their operating models. When you have higher rates, they're going to outperform.
One call, 1 point. The call, get along the banks. The point, the credit cycle. So let's do both right now. John, on the banks, the equity side of things, is that a favorite sector for you?
It is one of our top sectors. So in all honesty, the earnings revisions have turned more negative on the group because of the issues that you talked about. The comps are really tough on trading. The comps are really tough on investment banking. But I totally agree with Tony. The credit cycle looks healthy. The banks will be an outperform. I'm just not sure that they're at the very top of my list right now.
John, why are comps so meaningful when they're so predictable?
It's a good question. I mean, ultimately, investors do look at earnings growth and the and it's something that's going to weaken. But the big issue that I was highlighting here, though, is it's the revisions to the numbers. The estimates are going up much more for industrials and materials and brick and mortar retail than they are for banks. So relative to other groups, that's really where we're seeing them showing a little bit of weakness as opposed to simply where they compared to a year ago.
Underpinning this call, John, you mentioned the credit cycle. We've got two great guests to do that with us right now. So, Noel, first to you. When you look at the fundamentals of credit, price of the story to the side just for a moment, because it's expensive. I know that, granted. But the fundamentals, is it that positive?
I think so, and it's largely underpinned by the consumer and the corporate fundamentals. And really, yes, you mentioned valuations, that's spot on. There's not a lot of premium in the new issue market, but there still is some value to be had within the credit cycle. I think just the next couple of months are going to be a little bit trickier, which is why we would recommend kind of staying up in quality within the rating spectrum, and then on the duration side, staying close to neutral and waiting for some of that positioning to come out before you look for higher rates and a steeper curve.
Tony, I want to put that same question to you.
Yeah, so Jonathan, we definitely like the financials a lot. One of the areas in fixed income is the preferred market, which is heavily concentrated in financials. We like that quite a bit. As far as the credit cycle, I totally agree with what Jonathan's saying, that we're going to have a very positive credit cycle for quite some time now. When you look at corporate balance sheets, both cash flow and earnings quite strong. Leverage metrics are back to pre-pandemic levels. That leads to what we think will be more upgrades and downgrades from a ratings perspective. And importantly, when you look at defaults, which is really one of the key drivers of return in the high yield market, for example, we are seeing default rates that this year are below 1%. Forecast for next year have them at 1.5% or so. That's versus historical numbers of 3.5% to 4%. So the credit cycle, we think, is very strong right now. And in addition to that, companies have taken advantage of these very open capital markets to really extend out maturities on their balance sheet. So liquidity is also quite strong. So the markets are, risk premiums are low, but we call that price to reality, which is a healthy and strong reality rather than price to perfection.
That's a very constructive view, I've got to say. 7 minutes in, equities unchanged on the S&P 500, the Nasdaq negative 0.07%. Guys, let me finish with this, just one question. pretty much everyone I speak to right now, I'd say if I was going to throw a number out there, 90% of the people I speak to right now all expect some volatility to year end, a pullback, but a pullback they ultimately want to buy. Can I ask each of you how you would distinguish between a dip to buy and one to avoid? How would you distinguish between the two things? And John, first to you.
I mean, first of all, I think this whole, comment that we're due for a dip, that's like, going to the doctor and he says, you're really healthy right now. You've been healthy the last couple of visits, so you're due to get sick. I mean, the underlying economy is strong and growing. I mean, Tony's comments on the credit side, I think underpin the whole system, which is that, there's a lot of liquidity. There's very few defaults. We're going to see upgrades the way that he talked about. And so I just think that this idea that we're due for a correction is wrong. If something really were to break in terms of, the next variant being much worse or something, God forbid, sure, that would be a concern. But I'm not seeing something in the cards that looks like the system is breaking down.
Tony, your take.
So I'd say two things. One would be, as Jonathan just mentioned, a new variant that's far more, the severity being much greater. That would clearly be a dip that maybe you don't want to buy. And number two, I think it's if you were to see a policy mistake, primarily out of the Fed. We don't think you're going to see that. We think they're going to be very deliberate in how they taper and when they even think about beginning to tighten. But policy mistakes, certainly from the Fed, would be one that we would be concerned with.
Noelle, you get the final word.
Yeah, we're watching the data, looking for the underlying and significant moves within the data based on Delta variant and other concerns over the next coming months. And that's when we would look to buy the dip, because ultimately we are hanging our hat on a solid consumer here, and that's supporting credit, that's supporting corporate fundamentals over the long term.
Noelle Coram alongside Tony Rodriguez, together with Jonathan Golub. Thank you very much for joining us through the opening bell. Into the opening bell, 10 minutes out of it. Equities down negative 0.1% on the S&P, on the Nasdaq down 0.2%. Let's check in with Abby for some movers. Hey, Abby.
Hi there, John. Well, one area of brutal declines for the markets, not just today, but this year, China tech, and that extends today. And of course, in the Asian session, the Hang Seng was down about 1.9%. The continued fears about a regulatory crackdown from Beijing, that's taken the tech sector down in a huge way. Alibaba, JD.com, Tencent today, those ADRs all down more than 2%. The Nasdaq Golden Dragon Tech Index down about 50% from its February high on this strange going concern risk that no textbook author probably could have ever imagined. And now, as you know, it's extending, of course, to the casino space. We right now have Wynn extending yesterday's decline, the biggest two-day drop since March of 2020. This, of course, is Macau officials are saying that they might have to put in government regulation, supervision of the casinos, the Macau casinos, on a day-to-day basis. Some have said that the Chinese tech stocks are uninvestable because of, again, that odd going concern risk. Well, now it is extending to some of these U.S. casino operations that, of course, have operations over there in Macau. Brutal day for China shares,
What a tough day for Wynn Resorts, down another 10% or so. Abby, thank you. It's a tough time for economic data, for people who have to forecast it, yet seemingly journalists, strategists, economists are very good at explaining why the data is where it is after it's come out. But going into it, I think there's a story there that we haven't paid enough attention to. Pretty much everyone is struggling to get a read on this economy, whether it's payrolls on any given Friday, on any given month. When we talk about payrolls in the United States on the first Friday of pretty much every single month, we're talking about a range of 600,000. And on the last payrolls read, we were still south of the lowest estimate on Wall Street. Look at the numbers out of China overnight. 2.5% retail sales in China. The estimate have a 7 handle. A 7 handle against 2.5%. That is a monster downside surprise, and that is going to be the conversation next on this program. From New York City, this is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
The boosters work, and they will definitely help. The boosters, both the Moderna and the Pfizer booster, take antibodies back up to at least where they were, and probably twice or 4 times where they were at the peak. It's definitely teaching your immune system to recognize Delta better. The antibodies that people are making after a booster, they are better antibodies. And they're also probably then better antibodies at recognizing other variants in the future. If you get infected once, your immune system says, all right, here's how much I want to set aside of memory, right, to not get that again. You get infected twice, your immune system says, well, that didn't work, right? It should probably up that some. You get infected 3 times, your immune system is like, all right, this is a problem. It's really worth not getting sick anymore. And so the vaccines are essentially that, right? And if the immune memory was pretty good after the second one, what's probably going to happen after the third one is that it's going to be more stable. Even if the peak is the same, you're going to keep more of it for a longer period of time. It's a race, right? It's a race between the virus and your immune system.
It's such an interesting new world.
The world is changing.
For us, it's not about being first, it's about being the best.
While everyone is zigging, we're zagging.
We feel like we can maybe help people out more.
We have an enormous number of big ideas.
We are becoming the essential ingredient for all of this cloud economy that is upon us by connecting everything on the edge.
We're certainly coming in well below expectations, particularly on consumer-driven aspects of the market. And, we kind of characterize it as transitioning from growing pains to slowing pains. So we do see a slowdown globally. And the retail sales number is one of the biggest ones where we're seeing that. It's no surprise given what's been happening with COVID.
That was Tony Rodriguez of Nuveen on with us just moments ago. This as China's economy takes a hit from renewed virus curves, with retail sales coming in well below expectations. The signs of slowing growth fueling concerns over the global recovery. With us, we need to touch base with Damien Sasser of Bloomberg Intelligence. Damien, let's go through the numbers together. 2.5% retail sales against an estimate of 7, a 7 handle. We got a 2. We can go down to industrial production, 5.3 against an estimate of 5.8. Property investment, 10.9, the estimate 11.3. That retail sales print. Yeah. Now, Damien, this is not unique to China. We've seen similar stuff in the United States where we've just completely failed to get our hands around the magnitude of an acceleration or deceleration. How much weight can we put on this data, Damien, or for that matter, the estimates going into it?
Well, I think what the market is trying to do is they're trying to attribute this to Delta, but really this isn't Delta as much as it is a lack of semiconductor chips impacting, auto sales. But for me, if you look really deep into the data, this is about deleveraging in the property sector. If you look at furniture and home appliances, down. And look, for me, this points right at Evergrande. The company was downgraded by S&P to CCC overnight. This is after Moody's and Finch downgraded the company just last week. This is a big issue. This is a company with $300 billion of liabilities, as we've mentioned, Jonathan, $13 billion of cash, $30 billion of payables due in the next 12 months, and my goodness, $200 billion of unfinished homes, so they can't even generate the profits and the revenue necessary to pay back their creditors.
Whenever we have a company this big, Damien, with liabilities that large, as you described, got to be really delicate with some of the headlines that are coming out on any given day. Overnight, you went through some of the downgrades. What we also got was China telling banks that Evergrande probably won't meet those interest payments on September 20th. We're all trying to understand how the dominoes fall. You and I have been having that conversation every single day now over the last couple of weeks. Have you still been sitting there wondering who gets to hold the bag here? Who will hold the bag? as this slowly unravels?
Well, I mean, you have to look, I guess, to Anbang and HNA and some of the other big defaults that we've seen in China in recent times. And look, I mean, Beijing kind of, was able to stem the tide. They prevented contagion into broader economy. I expect they're going to do much of the same this time around. But for me, the real black hole, Jonathan, as you rightly point out, is the amount of off-balance sheet financing this company has taken, wealth management products. We've talked about this in the past. The fact that we just don't know how much short-term funding they raised doing that and how pervasive that is throughout the Chinese economy.
This is a bear's dream right now, Damien, and there's a big caveat here, so let's go through it. The economic data is disappointing, it's decelerating, point one. Point two, there's a really unpredictable regulatory rollout right now in China, touching pretty much everything. And point three, we've got a large property developer unraveling to some degree. Now, how you characterize it, that's up to you, but you can see the data, the numbers, the headlines as they come in. Put it all together, and then I put a dashboard on what I would expect to be hit by these concerns, Damien, and I don't see it. I don't see it in the Aussie. I don't see it in the Chinese currency. I don't even see it really in the copper market either. Off the back of all of that, copper's actually having an up day, positive 1.5%. How insulated is this story at the moment, Damien?
No, I mean, you absolutely hit the nail on the head. I mean, the fact that you look at Chinese 10-year, I mean, the yield actually rose today on this news. You would think you'd see a flight to quality move or something along those lines. We have, however, seen dollar yuan kind of rally into this. I mean, 643, I think, it's up a bit today. I mean, which is also quite interesting. Look, that might have something to do with the southbound connect I mentioned earlier, the fact that China is going to allow locals to invest in Hong Kong listed bonds, many of which are issued by U.S. corporates. So, that could be a change of face. But look, I mean, I think, for me, you have to look at the carry on hand in a place like China. It's significantly higher than the developed markets. And that's going to continue to pull investors in. So if you look at JP Morgan, a lot of the sell-side analysts, they're still long JGBs. They still like them. They still like receiving in China.
Final question, Damien, into tomorrow. What are you looking for?
Oh, inflation, right? Transitory. I mean, look, I imagine we're a little bit behind China. We are going to probably see inflation stay, moderately higher. But look, I mean, it's anyone's guess, Jonathan. I'm not the U.S. guy. You need to be asking Ira Jersey that question.
I'll catch you with Ira later this week. Damien, thank you. Tomorrow, retail sales, initial jobless claims stateside. One bank, in fact, too, did nail retail sales. It was the lowest estimate on the street, in fact, worldwide, going into that number, 2.5% on retail sales. It was Nomura. Nomura said this: markets so far have significantly underestimated the scale of growth slowdown in the second half. Looting there on China. Let's bring in Katie Lyons for more. Hey, Kaylee.
Hey, John, well, here's the thing about China right now. You have that growth slowdown on one hand, and on the other hand, you have a continued regulatory crackdown from Beijing. And the latest sector in the spotlight is casinos, with China saying that regulators will be tightening restrictions on operators in Macau. That dragged heavily on casino stocks in the Asian session overnight, and once again is dragging on them here in the U.S. Las Vegas Sands, for example, gets more than 50% of its revenue from Macau. It's down 3% after a 10% decline yesterday. And Wynn Resorts, also heavily dependent on the enclave, is heading for its worst 2 days since all the way back in March of 2020. And of course, elsewhere in China, as you were just discussing with Damien, we have to keep an eye on Evergrande. The world's most indicted property developer is in a pretty great deal of trouble, John. Of course, you have those liquidity concerns. And when I say it's the most heavily indebted, I mean to the tune of $300 billion. And we have a chart here that is a great way to visualize that. It shows the equity market value, that's the blue line, and then its enterprise value, so including debt in there, is the yellow. You can see the wide gulf in that, in between those two, a massive discrepancy, which shows to how insane the amount of debt is that this company has put on in the last 5 years. And obviously, a potential Evergrande default could have a number of ripple effects. Then you have the regulatory crackdown and the slowdown, and what that has led to over the last year is significant underperformance for Chinese equities. The MSCI China Index down about 5.5% over the last 12 months, while the MSCI All Country World Index is up the better part of 30%, John.
Kelly, it's been a tough time, that's for sure. Kelly Lyons on some of the markets affected by what's happening in China right now. Kelly Lyons, Francine Lacqua, and Matt Miller picking that story up, no doubt, tomorrow morning at 5 Eastern on Bloomberg TV. Your equity market more broadly up 0.25% on the S&P, advancing 10-11 points. Our stocks editor with the sector breakdown, Dave Wilson. Hey, Dave.
Hey, John. You've got 8 of the 11 main industry groups in the S&P 500 higher in early trading. Energy stocks really leading the way. You're looking at that group being up more than 3.5% in response to a fourth day of gains for crude prices. Brent crude above $75 a barrel is definitely getting people's attention. And then you look beyond that, you see materials, financials, industrials, the kinds of companies that do well when the economy does well. There is a notable exception, though. The consumer discretionary category, the worst performer out of the 11 main groups, and a lot of that is what Kaylee was just talking about a few moments ago, what's happening with the companies that own casinos in the Chinese city of Macau. You're talking about a second day of declines. You look at the S&P 500 casinos index down about 7.5%, headed for its biggest two-day loss since June of last year in response to the prospect of Macau ramping up regulation of the industry, part of a broader trend in China to really regulate companies more strictly.
They have had a tough time as well. Abby and I talked about that earlier in the hour. Dave, thank you. Dave Wilson, our stocks editor, on top of the story through the day on Bloomberg TV and on Bloomberg Radio. Up next on the program, your trading diary, what you need to be looking for going into the end of this week, the back end of this week, retail sales and jobless claims tomorrow morning. From New York City, this is Bloomberg.
Do you think your synchronized swimming skills help you as the head of the European Central Bank?
Yes, they do, actually. If each individual is brilliant, it's great. But if they don't work together, you will not get the gold medal.
There is wide disagreement on whether we've seen the worst of the Delta variant.